Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Morning snipers, welcome. Thanks for joining. We're gonna get started in just a few minutes. Welcome, I hope everyone's doing good. Happy Friday morning. Welcome everyone. We're gonna go for 3 hours, 7 to 10. Hopefully my back can hold up. I went to the doctor right after yesterday's session and I got some painkillers, naproxen. So we'll see how it holds up today, and we're gonna look at gold. We'll look at US 30, Nasdaq, and Bitcoin. Wow, 118,000 new all-time high. Let's see if it can hit 120 today. That would be amazing going into the weekend. And we'll go over news today, and I don't think there's any earnings. Last I checked, there wasn't any earnings in the pre-market and nothing in the after hours, and we'll get into it, okay? Again, guys, just please trade properly Spanish. You guys have done good in the last few days. Please don't do anything silly on a Friday morning. Worst feeling looking back on a Friday. 3,350.
Hey guys, good morning.
We're back right now.
Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Recording in progress.
Welcome everyone. Welcome to Stocks Never Trading. My name is Ron. My partner is Dave. Welcome guys. It's almost 7 a.m. Eastern. It's a beautiful Friday morning. It's Friday, July 11. Thanks everyone for joining. We're going to go for about 3 hours till 10 a.m. Eastern. So we're going to go through COMEX. We're going to go through Wall Street. And we're going to see how a few securities are moving on a Friday morning. And then get ready for the weekend. So welcome guys. We're going to get started with the news. We're going to go over all the news in the markets. And then we'll look at earnings. I don't believe there's any earnings in the pre-market or after hours today. I could be mistaken, but we'll double check. And then we'll start getting into the charts. We'll get started off with gold, XAU, USD from the daily, hourly back down to the 5 minutes. And then we'll look at the US indices after COMEX. We'll look at NASDAQ and US 30. And then we might have a brief little look at also Bitcoin going into the weekend as well. It broke an all-time high. Previous all-time high was 111, 112, and now we're sitting at 118,000. So Bitcoin's had a big breakout, which is pretty good for long crypto holders. And we'll see how much higher we can go before there is a retracement back and retests. So let's get started, guys. Hope everyone's having a great day. Again, it is a Friday. Please use proper risk management when you're trading. Some traders struggle with trading on Fridays and go back into their bad habits by doing a lot of silly things. And you don't want to do that anymore. So let's stop doing that. Start trading with some responsibility and start trading with some discipline. Again, if you've hit daily goals, weekly goals, you're well on your way. I would suggest scaling down, decreasing your sizing, slowly getting out of the markets and enjoying your day and your weekend. But again, some traders have that gambling mentality and they just don't have discipline and can't stop. We all have gone through it, but there's got to be a time where you got to learn a little bit of discipline and correct that, okay? Let's get into the news today. So we're on the right date, Friday, July 11. We've had some news coming out of Europe, lots of British news. We had a red folder, GDP, month over month in the UK. Came out and the actual number was negative. You can see previous was negative 0.3 and they were forecasting a positive outlook of positive 0.1%. And then the actual number came out red. Below the forecast, and it is a negative GDP of negative 0.1%. So that came out in the UK. If you're trading the pound dollar or anything to do with the pound, maybe you had some volatility. Pre-London, this was all came out at 2 a.m. Eastern. You had UK construction output, UK goods trade balance, UK index of services and industrial production, and also manufacturing production. So lots of news coming out of the UK today. We're moving into this session 8:30. So just to remind you, 8:20 is COMEX, Commodities Exchange Open. That's where gold, silver, and other precious metals open up and have their exchange. And then 10 minutes later, we do have some red folders here in Canada where I am. We'll have a red folder high impact employment change. We'll see what's going on there. And also the unemployment rate looks like it's increasing from the previous month. Unemployment rate was at 7% here in Canada, and they're forecasting a continuation increase of 7.1 to our unemployment rate. So when unemployment starts hitting 10%, it's kind of big flags and could affect the economy and everything like that. So 7%, some analysts say 7% is not high. Some say it's high, but when you get to that psychological number, that 10% anywhere, it is pretty high where you've got to 10% of your population is out of work and doesn't have work. So it's not very good in the economy, okay? And then we move into Wall Street. We don't have any speakers today. We don't have any big announcements at Wall Street. And then just trade careful and treat it as if it is a Friday and just be careful, okay? Whether there is high impact news or not, you still got to treat Wall Street open with respect and don't do anything crazy, okay? And then earnings, like I said, yep, there was nothing pre-market, and I don't think there's going to be anything in the after hours on a Friday. Fridays are usually limited with earnings going into the weekend, so we don't have to worry about earnings today. No biggie going on with earnings. There wasn't any big names this week with earnings. Delta was in the news with their earnings. And that's basically it. Maybe next week we're going to have more big names with earnings. That's why over the weekend, just take a look, do some little bit of analysis, and prepare yourself for next week, okay? In the news right now, Trump is in the news with tariffs around the world with all of the countries. Here in Canada, again, Trump hits Canada with 35% tariffs, and he's threatening more. So we'll see how everything is affected over here in Canada with these tariffs and in the United States. Stock futures retreat as Trump threatens 35% against Canada and also multiple countries, not just Canada. On yesterday's session, you could see in the news, he was just putting tariffs on pretty much a lot of the countries. Okay, Bitcoin hits fresh record as risk on mood continues. So who knows, if there's more going on the weekend, we might see Bitcoin continue to break 120, 125,000 a coin. So broke all-time high, and we'll see if we get a retracement, but looks good for any crypto holders of Bitcoin. Delta was in the news. They had earnings this week. So Delta leans into economic split with premium push. What else we got going on? Trump's copper tariffs to hit power grids, data centers. That's coming out from Bloomberg about 10 hours ago. The US dollar is losing allure for Chinese traders, which creates a runway for the Chinese yuan. Trump's tariffs risk a pending trade from Starbucks coffee to beef. So you can see it hits all sectors, hits everything. So it's not just it's not just a particular sector like the auto manufacturing. It hits that too, but it's hitting everything from coffee beans to beef cattle to everything around the world. Okay, so just looking at here, Vietnam surprised by Trump tariff announcement, seeks lower rate. What else we got going on? That's it. You can see Trump is in the news a lot with tariffs, but we're used to that. It's not the first time we're hearing about this. So right now in the futures markets and pre-market, you've got S&P futures are down 0.64%. Dow futures are down negative 0.5%. NASDAQ 0.6%. Russell's taking a little bit more hit. The mid caps negative 1.1% right now. And gold is up almost 1% right now. Okay, so let's get into this. Everyone on YouTube, thank you guys for joining. There's a free Telegram channel pinned at the top of the channel for you guys. It gives you all of the notifications for all of our live sessions, recaps of our other Zoom sessions with Coach Dave over here and the snipers. And some educational material in here for you guys, and blogs and everything we do here. Trade ideas and setups that we take. And we're going to have more, starting next week, we're going to have more giveaways, more promos. We're going to get started next week with all of that, okay? And if you want to join the team, we'd love to have you guys on the team, stocksnipertraining.com. This is our website. You can go under and look at all the products we offer. Lots of education if you're looking to learn a little bit more about the financial markets, technical analysis, fundamentals, risk management, psychology, and trading. There's lots of education we have over here with myself and Dave, and all of our live sessions that we do. our schedule next week will probably be all New York sessions, like 7 to 10, maybe Monday to Friday is what we might be doing next week. And also, guys, if you're looking for a blog for free education, we do have it here. We added one last night, fair value gaps over here. And later today at around 1 p.m., Snipers in Zoom, we're going to come on for a 60-minute crash course. We're going to talk about fair value gaps, and we're going to go to the charts and also identify what they are. Not just fair value gaps, we're also going to talk about gap up and gap downs, like on daily candles, and how more than often they do get filled. So we'll talk about those as well, and why daily candles do gap up and gap down. So it'll be a 60-minute crash course on fair value gaps, and any other blog, they're all in here. Whatever you need, I'm sure that there's something that you can learn about in here. And so let's go, guys. Let's get into the charts. We're gonna get, like I said, we're gonna get started with gold. So just over here from 5 a.m., you can see it kind of hit support levels. It broke this resistance over here at 33.43. We hit some highs up here just under 33.50, and now we're getting a little bit of a retracement. See if it comes back down, right here where you had resistance. Maybe over here now it's going to turn to support. You might see a little bit of a bounce here at 3,342, or it could just dip a little bit further, and then you got to look for that next supporting level, okay? So let's start off with a top-down analysis from the daily. Then we're going to go down to the hourly, and then finally come back to those 5 minutes, okay? So this probably looks really familiar with you, this chart, these daily candles, because we talk about it every single day. So you guys are probably getting sick and tired of me talking about this. I get it. I know sometimes I get sick and tired of staring at the same stuff every single day. But welcome to the world of trading. So the more you stare at it, the better you get at it. Then you don't have to do this type of analysis that I'm doing every single day, because what you can do is you can have your point of interest levels already set up. These are static lines. You can have your zones, and you don't have to go delete it every single day and start fresh like the way I do it. I do it for education purposes, but if I was trading all by myself, I definitely wouldn't be doing this every single day. I would do it probably at the start of the week, like on a Sunday or Monday, and I would keep it static all the way to the end of the week, like today. I would just be making some minor adjustments, removing some lines that are no longer necessary, and just updating a few areas and just watching how the volume trades in all of these different zones. So you can see I'm doing what I normally do every single day here. I'm just doing it while I'm talking here. So when you get in the habit of knowing exactly what you're looking for, I'm sure that you guys are going to get the hang of this, and you guys will know exactly what you're looking for. So it's very repetitive. That's the beauty of it. When it starts getting really repetitive, then you're going to know exactly what you're looking for, and you can start to do this much easier, okay? So just what I did right now, as I was talking, I located the all-time high right there, 3,500, that we hit on April 22nd, and then I can see the drop, the retracement all the way from the all-time high was right there, that wick right there, 3,120. We hit that on May 15th. You can see how we had some resistance here from the all-time high. It hit a second top right there. It hit a third top, and we're still moving away from the red box. Also, when we came into this bullish flag pattern, you can see when we came back in, it went back up. It did break right here. That's what got us down to our 3,120. But then we had 4-day barcoding where it was bearish, bullish, and we continued to trade inside in between these zones, where we came up a third time, ready to break and go to that all-time high. Notice the date, it was a Friday, June 13. Over the weekend, news happened and gold sold off going into the new week, and it pushed all the way right back down, where we almost came 2 times into this green zone, but produced higher lows and came right back up. And then now you start to see how we're trading like last week and then this week. So now let's start to kind of dissect the start of this week. We hit the bottom right there, like that supporting level. 32.85 is a big psychological number on gold. You can see how many times bodies retested this area, how many times bodies closed and opened at this area. So that's that point of interest. Also, this is a point of interest above us. That's also a point of interest above us. When we came down here Wednesday of this week, you can see how the market was slowly coming down on gold. Monday, Tuesday, Wednesday. Wednesday is a big day. Monday to Friday. Wednesday is your hump day. Like if you're working your Monday to Friday schedule, Wednesday is kind of you take a big breath of fresh air and you're getting closer to the weekend. Markets move that way as well. Monday, Tuesday, and then notice, start to do a little bit of back testing, start to do some analyzation over the weekends, and maybe you'll see Wednesday is kind of the midweek reversal. You can see how we were coming down Monday, Tuesday, and then we bottomed out Wednesday, and since then, look at gold. It's been coming right back up, right? You could get Monday, Tuesday, and then Wednesday. Doesn't always have to be a corrective move coming back up. It could just continue with the move, and maybe we would have got a bearish candle closing below 32.85, and then maybe it would be continuing the move the rest of the week, and we wouldn't have that weekly reversal. But just keep in mind, when the markets are moving towards the midweek Wednesday, there could be a pivot. Okay, we use that word pivot. Get familiar with what that word means, pivot. Okay, we came down there, and then you see it didn't close above 50% of Tuesday's big bearish candle. Again, we open up Thursday, small pullback. Look how small the wick is. Look at the size of the wick, the high on Wednesday. We broke that, and it came back up, still below this big bearish candle, got rejected. That is approximately 50% or just above it. And then look at today, how we opened. Very small pullback. Look at the wick. Again, we filled the Wednesday's wick, and now we are engulfing all of that bar, and now we are even trading above these high wicks, and we're trading into this bearish candle from last Thursday. Okay, so just now following points of interest. Where did we close yesterday? Right there. Was there any gaps up or gap down on the daily candle? That's again what we're going to talk about in our crash course later today, about gap up, gap downs, not just fair value gaps, but we're going to talk about gaps. That's when we're talking about a fair value gap, that's kind of one topic, but we can also talk about gap down and gap up in daily bars. So you see, it just kind of closed right there, opened right there. Notice where the low of the day is, okay? So we opened, it was bearish. There was a tiny, it wasn't a huge bearish candle. It just got down to there. There's our low of the day, the purple line. So you see we opened roughly 3,323 and 50 cents, I would say. And then look at the low, 3,322. So about 15, 20 pips. That's all it dropped and continue to go up. Are we above 50% of the previous day's candle? Yes. Do we have a higher low the previous day? Yes. Are we above 50% of Wednesday? Yes. Do we have a higher low right here compared to these days? Yes. Okay, so you see how it's building from the bottom and we're coming up. But we've had resistance quite some time, because this was a downtrend that was coming down mid-June, where we had lower lows, lower highs, new lower lows, lower highs, lower low, but now it's starting to maybe possibly reverse. Look also what we have on the daily. I'll get to that when we're just finishing off the pattern, but it looks like a higher low double bottom. Now we've got this big bullish daily candle on gold. So let's just continue to walk through the volume. We opened, we made a low of the day. It's a higher low. We came back to the opening price, and look at the gold buyers. They pushed the volume all the way up. Did we get above yesterday's high? Yes. So let's just mark yesterday's high with a yellow line as a point of interest, okay? And we continue to drive. Next point of interest I would be looking at is this entire body, the point of interest where it opens. Did we get above that? Yes. 3,336.37. We've been talking about this all week. And are we filling this wick, this wick, this wick behind? Yes, we are. Can we place a line somewhere at this wick, this wick, this wick? I know that they're all different lengths here, but just try and pick one where you get a few touches. I could leave it right there, but I can also lift it up maybe a little higher right there. depending wherever you want to place it. What I look for is when I'm placing it where I can put it, I also look to other days, previous days, and see, do I get any good touches there? So if I leave it right there, I get that wick, I get that wick, I get that wick right there, I get that wick and that wick, and then I look at the number, 3,345. If it's a good number, psychological number, you can keep it there. You can adjust it, you can play with it, wherever you want. I think right there, 3,345, it also gives a little bit of distance from the previous point of interest, and look at it, it's continuing to break out. Does our daily candle have a wick on it right now? We're trading right at the highest point of the day. I can place a purple line right now, but it's probably going to go a little bit higher. Okay, so we are currently at our high of the day, 3,348. If we continue to drive now, where could we go? Okay, so I've got a body and a body and a wick right there. So one point of interest that definitely we need to analyze for today is right there. 3,357. It might have enough momentum to break today's high and continue to fill up to that point of interest. Okay. It could also get rejected back down. Okay. There is also, it could be a lower high here and push down. If we do push down, first area that we could get support is this yellow line, 3,345. That would be a really, really shallow pullback. It's only about 10, 15 pips from where we're at. A more proper pullback would be maybe right here, 3,337. And that looks roughly to be about 50% of the current volume in today's daily candle. Let's take a look at that. I know the daily candle is moving as I'm speaking. So when I'm placing this Fibonacci from where we open to the current volume, I know it's fluctuating and it's moving. But roughly right there, 3,335 is exactly like 50% of the current volume. I could also draw a bullish zone with one notch above the 618, one notch below the 382, and then I get my maybe bullish zone. If it pulls back into here, if we lose all of this bullish volume and the sellers push down gold, they exhaust it all the way down, all the way down, all the way down, this would be the proper area to maybe look for a nice pullback buy, like right in here. If it comes, retraces in here, anywhere inside here could give you that opportunity where the buyers are there pending and then they get filled and then they're taking it back up to this yellow line, maybe back up to the high of the day and then break for a new high of the day. Okay, there's that option. However, there's also the option that sellers could continue to come into this zone and not reverse there. Maybe it comes down here and it breaks that green zone. Then we're looking for support right here at this yellow line, 3,330. That was yesterday's high, could be today's support down there. Okay, if that can't hold, then the sellers might bring it all the way back down to the opening price. I don't know if they'll do that today unless there's some major news that could, exhaust all of that gold volume going into the weekend. There's got to be some type of major news. If not, we could just look to buy this pullback and continue to drive up. Another thing that I always look at on the daily before I go to the lower time frames is the overall pattern. Okay, so what I see here is like right here we created some area of support. You can see it came down, but the body of volume is still above here. So if I go across, I can see right here, the Wednesday, that's where we reversed the week. Look at what it tapped into, that green zone. So I stretched that green zone into the future. In case we come back down, that could be a fantastic area to look for buys. And then this is what we got going on. This leg that came down right there, stopped, pivoted back up. Here's our neckline on the daily right there. Just as if these were 5-minute candles, there's our resistance. Okay, and then sellers came back down on the daily. Notice how right there would have been a double bottom like at the start of this, but that wick on Wednesday is actually a higher low. So we got a higher low double bottom creating depth of market above us. And now we're coming back up with this leg. Right there, again, is the resistance right there. So there's your kind of double bottom, your W pattern. So there could be your break of structure, and then you're trading into that big red zone. If you come in there, there's already been rejected. Now you're coming in with more volume. Maybe it comes in there and they reject it back down. we got to figure out where the neckline is, like right around here. Here it's resistance. Maybe it will pull back in here next week and create support there. And then all of a sudden we're driving all the way back up through our all-time high kind of supply box. Okay. So there is that path. But what we got to do is we got to continue to follow our daily candle and figure out where it's going to close today. There's 9.5 hours to go on it, lots of time. But you don't have to sit and watch this daily candle by the minute. You can come at Saturday morning, Sunday night, figure out where this thing closes and start to develop your plan for how you're going to trade gold next week. But look at how it's building. Okay, so it is, and then if you look even longer, you look over here, it is trending up. It's coming up. All of this structure right here, higher low. This structure right here, higher low. This structure right here, higher low. But we do have a lot of resistance where they've been pushing it down, but slowly we're coming back up. So today's close of gold candle is going to be very, very critical going into the weekend. So now this daily candle, I've got some points of interest on the daily. Now I bring it down to the hourly, start look for some hourly, same thing, hourly structure, see what it's doing. So all of these zones I see right here. Here was a nice hourly pivot. Will it ever come back down to 3,312? If it ever does, I place a white line there to show me that was a nice hourly right there, resistance. Volume closed above. Look at the pullback. Eventually it came down and it turned into support and go back up. That's exactly what I was talking about on the daily. If we break that W resistance, we break to that larger red zone above us, maybe the pullback will be where our current resistance is, will be daily support. Okay. I don't have to sit and wait for this to come down to me. What I do is I just place an alert down there. If it comes down here, I'll get an alert and I have to think fast when it gets down there. What am I going to do? Am I going to be buying or selling at that point? I don't just guess when it gets there. I wait for volume to either come down here, like do something like this, kind of close with volume above, maybe a retest, then go into a buy. However, if it comes down there and the sellers close it below there, then this white line could turn to resistance and then I look for sells. Since this white line, look how it's been coming up. Right there, this was hourly resistance right here at this daily point of interest, 3,330. It got rejected. Look at multiple rejections. Finally, we close with blue volume above that, and then look at it turns the yellow line right there into support. And we're continuing. It was very choppy. Okay, you can see here at 1 a.m. it came up, back down. 2 a.m. pre-London, it came up, created a higher high, and then right back down. And then 3 a.m. London came right back up, big bullish candle. 4 a.m. came up and then right back down. 5 a.m. we came right back up, closed above 50%. And then now 6 a.m. you got an ignited hourly open that just hit the high of the day right there, 3,348. And then our new daily hourly candle open at 7 a.m. we came again, retested the high of the day. Looks like tweezer top highs, looks like equal highs up there, and they're trying to push it down right now, okay? So if we do come down, where do we have some good hourly volume? Right here, the last hourly candle. Can we figure out where 50% of the last hourly candle is? Right there. I can find exactly where 50% is. It's that white line right there, 3,342 right there. Okay, so that's my hourly support from the previous hourly candle. And then you notice how you look backwards, it was resistance on the 3 a.m. London candle. It's where the 4 a.m. candle opened. It got rejected there, rejected there, rejected there. This hourly candle at 6 a.m. is our first hourly candle that closed with volume above there. So if we do retrace down all the way down there, that might be a good opportunity to buy. I can also make a zone, okay? A zone, not just a 50% point of interest. There's my zone. It's the 1 ratio above the 0.5 and the 1 ratio below the 0.5 on the Fibonacci. So if it comes down there, it might be an opportunity somewhere inside this zone to possibly grab a pullback continuation buy and continue to go up and test these daily highs up here. However, if we break this, we could be coming all the way down to this zone. This zone is a better buy zone than this zone. Why? Because this only represents the last hour of volume. This bigger green zone represents multiple hours where volume consolidated in this area, okay? So if you're asking me which area is a better opportunity to buy, obviously the bigger zone, the deeper the depth of market, this is better than this. Right now, we're coming in as a shooting star right into this right now. So let's see what type of reaction we get. You can watch the hourly candle if you like. If you're an hourly trader, you got 33 minutes to continue to go on this thing. But what I do is I bring it down into the 5 minutes and then I watch what's happening. So look how clean the 5-minute candles are trading right now. Like beautiful. You got to look how nice bullish move comes up and then it retraces back down, holds, comes back up, creates a new high, comes all the way right back down to support, holds, comes all the way right back up to that zone. It goes down. It's not really choppy. This is clean price action. If you ask me, like I would love to trade this type of volume every single day. It's really clean. You just gotta understand what you're doing. Like it's still in a range. You could hold your buys and everything, but for me, I'm like a scalper. I like to scalp this move up, grab my money, maybe possibly sell it down. If not, I look at what the trend is. If it's trending bullish, I'll buy that leg again, make some money. I could sell that leg coming down. If I just have a bullish bias, I could continue just to buy these pullbacks. Again, I buy this whole leg up, make some money. That's probably way more than a daily goal. Like just measuring from down here to there, it's over 100 pips. Like you could grab 300 pips if you just bought that leg, but it doesn't stop there. It continues to come back into here again, consolidate and continue go up. That could be another 100 pips going up possible. But now we're starting to get a little bit choppy. Now it's coming down, going back up bullish, bearish engulfing coming right back down. There's that first 5-minute body that just traded right into, you see that white line? That white line was 50% of that previous hourly candle. And look at the response right there, okay? For scalpers, I'm calling all scalpers, you need to learn how to do this, okay? That right there is almost 40 pips coming straight out of that green box as soon as it hit that white line with zero drawdown. That's a sniper entry. That's a kill shot. That's as accurate as you can get in trading, okay? Doesn't get any more accurate than that. If you can hit one of those, your confidence will increase where you identify these zones. And I didn't do anything magical. All I did was I looked at the previous bullish hourly candle and I just identified where 50% of it was. That's that white line. But I also did the zone. And you can see how it pulled right back in there. And what was the initial response? Buyers were there protecting that and pushing it right back up. Will the candle close above there? Will the sellers bring it right back down and test in there? Could they close below that? Absolutely. But that's the first time we've retraced in that zone, and that was the initial response by the buyers. Okay. That's one way to help you, not just with trading, but also to understand your zones. Are you identifying these properly? Okay. Now we're coming back up, but look at this big bearish engulfing candle at 715. Even the 5-minute candles have structure. Okay. Can I identify where 50% of that big bearish candle is or a bear zone? Absolutely. Just like I did from the daily, hourly, 5 minutes, we do the same exact shit for these. Okay. There's the opening price of that big bearish engulfing candle coming down. Where did it close? It closed right there. Can I figure out where 50% of that candle is? Right there. There's the white line. I was very close when I was just guessing where it was. There it is. Can I figure out where there's a red zone of that big bearish engulfing candle? Yes, there it is. Can I get in the habit of bringing this into the future and see what happens there? Yes, I can. I just did it. Okay. So now, in order for the buyers to regain strength, they need to get the blue bullish volume above this zone, this point of control, close above there so that we can flip this green and maybe we come back in there and then we do something like this. And then we're coming back up to that high of the day and maybe a new high of the day breakout, okay? However, we could just be coming right in here. Like we got those buyers right there in that, and now we're retracing back up, but they got to transact in this big red zone from this bearish candle, okay? And if it gets, like if they get rejected and it comes back down, we could be coming back down to test where the body closed and open right there, or we're coming back down in this green zone. Will it make a new low, or will it come kind of in here and then the buyers are bringing it right back up? That's what we got to watch for in the next little bit. But right now we're transacting inside this red zone right now, okay? So that's what's going on the 5 minutes. Now we might start to get a little bit of choppy trading, some sideways trading, because we're transacting at the highest point of the day. Okay, and we'll see if it comes back down or we close above here and we're continuing bullish on gold. Okay, so let's just add our daily bar indicator beside us so that we are aware what happened today. So there was our opening price. You can see the small little pullback at the low of the day, and then we came right back to the opening price. Then all day it's been bullish volume, buyers, 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 buyers. That's right there where we hit the high of the day. You can see how many times we hit it: 640, 645, 710, 715, and they kind of pushed it down. That push down right there is what's representing kind of the wick that we had. It came all the way down there and right at that hourly white line, and we started to get our volume coming right back up. So you see it's coming right back up to test the high of the day. Maybe we will get an impulse breakout for a new high. If this blue volume can close above this red box in 2 minutes and 30 seconds, I will flip this zone to green. We invert it, and maybe this will be support acting forward to continue to take us to a new high of the day. Okay, so that's what I'm watching right now. I'm also watching where and how this candle will close. I see it came all the way right back up there. It didn't, in fact, hit the purple line, the high of the day, or create a new high of the day right now. It got rejected as it came up there. So now we got to see how much of this volume we can retain going into this. Okay, and it's 7:30, so we have another 50 minutes or less till we get to COMEX, so lots of time. We can watch gold. We can also get a head start and do some charting on NASDAQ and US 30 and get ready for Wall Street. But we got lots of time today in today's call. So we can watch gold for a little bit before we get to the indices, and we can continue to watch this right here. Is anyone trading right now? Is anyone in a buy in gold? Is anyone in a sell in gold? Are you guys on the sidelines watching? What is everyone doing right now? And welcome everyone on Zoom. Good morning. Thanks everyone for joining. Vinita, welcome. Samuel, Lukman, Lorraine, welcome. X-Red Clues, welcome. Thanks for joining, boss. Joel, welcome. Christoph, thank you for joining. Welcome, Danny. Welcome, guys. Conrad, welcome, guys. Sanya, good morning. Thank you for joining. Happy Friday. Welcome, guys. And if I missed you, I'm sorry. Welcome, guys. And everyone on YouTube, thank you guys for joining as well. If you guys wouldn't mind hitting the like button, subscribe to the channel. It does help the community, and we do appreciate it. Okay, and also can't forget, guys, always news in the markets. This 20-25 years all been about the news. Trump's administration does not stop over here. What do we got now? 7:33, just a couple minutes ago, U.S. Secretary of State Rubio held constructive and pragmatic talks with Chinese counterpart State Department. Russia's Deputy Prime Minister Novak gasoline exports ban for oil producer is under discussion. Okay, so we'll continue to keep an eye on the news right over here. It's all developing. It's live. So we'll see what happens. And this news does impact all of our financial securities that we trade. Okay, so just going through the motions, I ask you guys, did the buyers of that candle, this 7:35 minute candle, did they close above that red zone? The answer is yes. It's not a trick question. So there's the volume that did close above. So what I do is Now with the volume above, I give the benefit of the doubt that this zone is now going to fill with some buyers. Okay, so what I do is I make it green. And if it does pull back into here, maybe it might pick up some pending buyers and continue to drive back up. It hasn't pulled back in here because the candle opened ignited and has not had a chance to retrace back into here. That's because the buyers are asking to trade up here and not trade down here right now. So they're strong, they're asking, and what they just did was they filled the previous high wick and they've created a higher high from the previous candle, but we're still at this high of the day, this purple line. So let's see if this candle has enough volume to break for a new high of the day. You can see the daily candle right beside us. It's got this little tiny wick. Can they break it out for a new high of the day, or are the sellers going to hold this area down, absorb all of these buyers, and then push it right back down into the green zone? Okay, so we are right at that high of the day, and if you kind of do a red box from that purple line to these bodies and stretch it across, you can still see that the red box is still there. Like it came in there, back down, came in. That's what created the high of the day, back down, came in a third time, right back down. That big bullish candle, look at where it came right into the high of the day, and then look at the response at 7:15. A big bearish engulfing candle just brought it right back down. We came into that hourly point of control right there, and the last 15 minutes, there, we just broke for a new high of the day. Okay, now, will it be an impulse break and get rejected and come back down, or will this volume actually close above this zone, and then this red zone we can flip green, and maybe we're retesting this and continuing to move higher? Where could we possibly go? Look at all of this above us. Like, I don't have anything until I get to this yellow line. Remember that on the daily hour analysis, 3,357. There's got to be some type of structure from this red box or purple line to that yellow line in between here. I don't see anything now, so I got to look backwards. So you see the purple line and the yellow line. Let's go back on the 5 minutes right there. You see the last time we were trading with volume in this, above that purple line and the yellow line, all of this. So this, now I'm looking back July 3, okay? I'm looking back July 2nd. I'm looking back over here July 1st. Is there any kind of structure that I can see? I can see there was resistance, like right here. It came up, back down. Then it pushed for that. Then it came right there. There's kind of like a head and shoulder pattern right there. If I'm identifying this shoulder area, right there. I don't know if you guys can see it, what I'm looking at, where it came up right there, they rejected it back down. Then it broke to the yellow line. We've already got that identified. Then it came right back down, and then right there, again to that red line, they pushed it down. There's our head and shoulder. There's a point of interest of our shoulders, that red line. If I continue to look now across that other volume, you can see when it came right there again, it had a little reaction at that red line, back down, and went above it, past even our yellow line. That's why we've got our next yellow daily point of interest up there. And then again, it came close below there. Look at what it retested, the yellow line, or sorry, the red line. It came back above the red line. Look at what it retested, the red line, back up. Here it came all the way back down. So what I'm trying to say is, when it came right there, it got rejected again. That is a big structural area in between the purple and the yellow line. It's 3,352 and 25 cents. So now I go back to how the volume is trading currently, and there, if we break out, like it would be something substantial to come all the way to that yellow line. Yes, it could make its way up there, but there's where the short-term resistance is, right there at that red line. If it comes there, it could get rejected back down, and this would be maybe a positive zone, a green zone. Then it comes back up, it has enough momentum, break that, then we're coming to the next yellow daily point of interest, okay? So I ask you, did this candle close above, or was it just an impulse breakout? Now the evidence is there. The candle has closed. I can see how it opened. It broke right through there. That was the impulse. And then they rejected it back down and closed as an inverted hammer. Look at the next candle, how it's opening. Opened ignited bullish. Notice the ignited open. It opened. There was no pullback, nothing. And it's got this big, big, big wick that it needs to fill. It's not one of these little short wicks like right here. That's a short wick. That's a short wick. This is a rather large wick. So what that's telling me is the sellers exhausted all of those buyers and brought it all the way down there. This candle is very strong. The buyers are very strong. They're opening it ignited and they're trying to fill this entire wick, which they are currently doing. But can they continue to fill the entire wick and create a new high? Or are they just coming up and then they're going to get pushed back down with a lower high and come back down? So again, we still have not closed with volume above here. Maybe this bar will be the first one that does close above. Maybe this one will get rejected back down, okay? So this is where we're trading relative to the high of the day. And again, it was a really nice bullish candle from the opening, still bullish ignited. It pulled all the way up here, but that's a lower high from the previous candle. Why? Because that's a big exhaustion wick. It's not a small one, okay? So now we got to watch. Will they close it above there or will they close it below there? You guys are in sells on gold? I'm just waiting. There is, okay, I know some of you guys use this RSI indicator. There could be bearish divergence. See right there on that first push up to the high of the day, it was already overbought. And now if you do kind of like a trend line to where the RSI is right now, you can see it's a descending slope coming down. So that's telling me that the strength is slowly decreasing, but the price is continuing to make highs. Okay, so that's bearish divergence. So that maybe gives a hint that maybe the market is going to retrace back down. We're trading at the high of the day, but we got to kind of look for some clues in order to maybe sell with this. So far, I still see some strong bullish candles. So it's difficult to sell against these strong bullish candles. And unless I start to see maybe, again, the sellers reject it back down, close it below here, then we could definitely break down a little bit. Get rid of this inside zone. Okay, so look at them. Look at the buyers. Okay, we have 1 minute and 20 seconds, and we're coming right back up to fill maybe to that high. This is what I watch for clues. Is it going to be a new higher high? Is it going to be an equal high, or is it going to be a lower high? So that technically is a new higher high. They broke right above that previous wick. They created a new high. So the buyers are still there. They're still asking to trade up there. They're still very strong. They're still continuing this uptrend. In order to continue uptrend, you got to make higher highs and higher lows, which they are technically doing. This big move started from right there, from when we were doing our top-down analysis on the hourly, right at that hourly candle. So just recap, if you just joined us, where did I figure out that white line from where this move started? Was this 6 a.m. candle. Look at it. Hourly candle, okay? It's ignited, just like that 5-minute candle. It was bullish ignited. It came all the way up. It hit the high of the day, previous high of the day, came down and closed right there. And then I grabbed my Fibonacci tool from the opening ignited open and to the close. And then we figured out that was exactly 50% of that volume. And then we figured out our green zone. And that's that white line. So when you see the retracement, if you didn't have the opportunity to buy and you were patient and you didn't fall for the high of the day buy and you waited patiently, 15 minutes later, you would have got tapped in there. Maybe you didn't buy this wick. Maybe you saw how it closed and you bought this previous candle at 7:30. Regardless, you're in profit, okay? If you just waited for that. Did this body close above this zone now? Yes. So can we now make this a green zone? Yes. So you can still see how they're creating support. How did the candle open? It's bullish ignited again, short wick, and it's continuing drive. So right there, that red line, remember, that's that point of interest. If it gets up there, that's probably where I'd look to sell, right? Because then it's getting really overbought again, but now you're coming up to a higher time frame resistance area, that 3,352 and a quarter. So we'll see, will the sellers be there? Maybe not exactly right at that red line. What you can do is a little bit above, a little bit below, kind of you kind of manufacture your own little zone there, okay? Welcome, Sergio. Good morning. Do you guys want to get started with one index security, either NASDAQ or US 30, and then we can kind of, we can look at, here's NASDAQ, here's US 30, or do you guys want to wait till after COMEX to do them? We're here till 10 a.m., okay? So regardless of what my back is doing, it doesn't matter, okay? I'll be here. I just kind of like to watch what gold is doing right now because, you know, we've been breaking this thing down for the past like hour. So I really want you guys to not miss anything as everything is, so you know, like right there, that candle, now I've explained it properly to you guys why we retraced right there, okay? Hopefully that made sense. But if you kind of like, if we were flip-flopping, maybe then we would have missed that, or maybe I would have missed explaining that to you, okay? Regardless, that was a big bullish ignited candle, the way how it opened. It filled that wick, it came up to this high point. Look at, now it came to a nice psychological level, 3,350, okay? So now it came to a physical psychological level. That's where a lot of transactions can happen, okay? And that's where it got rejected right back down, okay? And then now, you know, it's coming. Remember, this was a red zone, red zone, red zone. With that body that just closed above, we flipped it green. So you see how it came in there now, and it's finding support, okay? And it's coming right back up. Now, you've got this kind of bullish spin top candle that's got a big high, it's got a low, it's got a bullish body a little bit in here. Now, with 90 seconds to go, I watch where this body of volume will close. Will it close above the previous close? Will it close above the previous bar's high? All of these things. I take into effect all of these things. I really, really analyze each individual candlestick, like right down to the last second, from the open to the last second. If it's a 5-minute candle, if it's a 4-minute candle, if it's a 3-minute candle, a 2-minute candle, a 1-minute candle, a 30-second candle, a 15-second candle, even a 5-second candle. I watch exactly how it opens, how low it went, how high it went, where it closed, relative to psychological areas, all of these things. That's part of your technical analysis, especially if you're following price action, okay? And then you'll pick up on some psychological clues as well. And just kind of maybe continue to trade with the trend to your best ability until the trend changes. So for example, if the sellers push it down and close it below here, I'm just going to use that same zone and just flip it red. And then if the buyers are coming back in here and it gets rejected, maybe like a couple times, creates like an M or a double top there, then I might look for a sell to sell it back down to this red line. Especially I got to pay particular attention at this yellow line because that's where buyers could be at that point of interest. Or I sell it down to the green box. And when it comes down there, if I'm in a sell, I have to understand that I'm selling where there could be big buyers. So if I'm in that position there, I got to do something, you know, like I could be, because I'm counter trading this overall bullish move. Because if I don't do anything down there, I could be in good profit. It could come right back in there and bounce right back up and do something like this. Come back where I entered, either if I have a break even or my stop loss could get hit, right? So at some points, you got to know what exactly you're looking for when you're trading. Even if I'm buying, if it comes down here and I buy pullback, I have to understand that if it comes down in here and drives right back up to there, I got to do something, right? Because in the past, when we looked at this, this was resistance. So it could come right back in there. and then get rejected back down. The only other thing is you got to hold the position to figure out where it will close. Because if it cuts through there and closes about there, you can flip this green and then maybe continue driving. But you'll get better and better and better at your trading the more you practice. Okay, so notice how we made that new high of the day. Okay, that's the new high of the day. We can even move this purple line up to there so we know where the new high of the day is. It gets very psychological, 3,350, and we got rejected. And now look, it's retested again, the green zone, and got a wick coming back up. So now we could be consolidating right here, okay? And we're going into 8 a.m. in the next 9 minutes, okay? So maybe at the next hour, things could reverse, change momentum, or continue. We see that a lot when we're trading together. When we're going into a new hourly candle, sometimes I'm in buys and I'm like, oh shit, we're going into that next hour. It's probably going to reverse. And more than often, it reverses and comes back down and either hits my break even or my stop loss. And I'm like, guys, that's that hourly momentum switch. Does it always happen? No, but you got to always consider it that every hour that opens, you get new momentum, you get new volume, you get new sellers in the market, you get new buyers. It's not just 5-minute traders, it's more higher time frame traders. They're hourly traders. They could be intraday traders. It could be swing traders. You got to know the security trading when a 4-hour candle opens up. Why? Because those are swing traders. Traders who specifically trade 4-hour candles are swing traders. They're not worried about this, what we're looking for 20 pips or 30 pip moves. These guys are looking for 200, 300, 500 pip moves. So if it comes to a higher time frame area and a 4-hour candle opens and we're scalping a move, that could switch the entire momentum of the entire security at that time. So you got to also pay attention to know exactly on your gold, if you're trading gold with your specific broker, what time do they have the 4-hour increment, the 4-hour candles opening? Even if you're a 1-minute trader, it doesn't matter. You still got to know that. That's where I always say you got to get to know your security. You got to get to know your security as if it's your spouse, as if it's your kids. You got to get to know its personality. The more time you spend with the security and you analyze it throughout the day, you're going to get more comfortable. You're going to know exactly how it reacts to news. You'll know how it reacts at certain time of the days. And this is where you're getting to know your security to get you as a better trader so you can eventually make money on a consistent basis. If I just switch to a security that I never traded, I don't know what the 4-hour candles open. I don't know how it reacts to news. I don't know how it will react to Wall Street market open or Comex or anything. So, it takes time to get familiar with it. And while you're getting familiar with it, lower your risk and lower your leverage. If you don't understand the security of trading, stop over leveraging. If you're wondering why you're blowing up accounts on a daily basis, that's probably has a lot to do with it. Until you get more comfortable with what you're trading, slowly start to increase your sizing. But always, rule of thumb, start small and then move your way up. You don't start big and then you're going to eventually move your way down when you have no money left. Okay, that's guys, I'm speaking facts. Okay, we speak with a lot of traders on a daily basis, and that's one of the biggest struggles and mistakes that a lot of traders make today. Is they start too big and they're unfamiliar with their security or time frame that they're trading and make a lot of silly mistakes that are easily corrected. You don't need to make trading this difficult. Unless you want to, that's up to you. I went through this shit for multiple years and I said to myself, this is enough. How much more money am I willing to lose before I even learn how to trade? And then I just stopped and I said, this is getting out of control. I got to really start to really respect the education of trading and learn. And then you can do what you want. But it takes time, guys. It takes a lot of time. To study these candles, it takes a lot of time. I can't tell you how much time I've invested in staring at these things. And I mean just staring at them, not even trading them. Just like right now, how we're staring at them, we're watching what they're doing, you're getting familiar with patterns, you're seeing, well, this zone was red, now it closed with volume above, is it still holding? All of these things. These are the things that when you're not in a trade, you should be analyzing. Make mental notes in your brain. If you got to write on a piece of paper, this what happened at this time of the day, so you can go later on and review. I still can't believe till this day how many traders don't even journal or don't even review anything. All a lot of traders do today is just trade, and they look for winning days, losing days, whatever it is, and then they just go to sleep and next day do the same thing over. They don't go back and even review anything, nothing. So how do you learn? How do you learn? It's just, guys, it's simple education. If I'm writing a math test at school and I get 3 answers wrong and I just go to sleep and then I go write the test again the next week without even reviewing what I got wrong, what do you think I'm going to do on the next math test? I'm probably going to get those 3 questions wrong again. So when you get something wrong in school, your teacher puts an X on it. I don't know, back in the day, this is how I did. When I got an X on my math test, I would go home, homework, and I would look at what I got wrong and figure it out, correct it, so that next test I would understand what I did wrong and get it right. Kids today, they don't get homework. I'm speaking from my kids. I don't think I've ever seen them open a book in 14 years. My son is 14. I've never seen him. I even asked the teachers, I go, do you give these kids homework anymore? Like, I remember when I was younger, I was getting homework on a daily basis. These guys get nothing. I don't know about your kids or where you guys are at, but these kids do not get homework. As traders, we got to have homework too. You got to, at the end of the day, give yourself 30 minutes just reviewing your trades that you took. Weekend is good time too. I know everyone says, Ron, it's the weekend. Last thing I want to do is look at the charts. But you have to, okay? That's what separates successful traders from unsuccessful traders. And you decide this is, at the end of the day, this is making money, right? I'll do whatever it takes to make money. I don't give a shit how much hours I got to put later on to study. It's just putting in the work. If you got to do it late nights, forget the excuses. I know someone says, Ron, I'm working. I got 2 jobs. I got kids. I got the same shit too. I got kids. I got jobs. I'm doing other things on the side. I'm building businesses, but I still have time to study always. If it's going to make me money at the end of the day, it's worth it. Believe me, it's worth it. Putting little time into your education is big time, guys. I hope you guys are taking it serious. I know some of you guys are really dedicating a lot of time to this. And I want you guys to understand, it's not done overnight. So for some of us, it takes years and years and years. All it is we're fixing our mistakes. We're fixing our discipline. We're fixing our risk management. We're learning how to control ourselves from not getting pissed off when we make mistakes. We're learning how to not revenge trade. Like these buyers that bought now at the high of the day, they're probably getting real pissed off that they're seeing a shooting star candle coming down. But at some point, you got to realize, especially when it hit 33.50, you got to go beyond the markets. You got to understand that could be a big institutional seller there at that block right there. This has got nothing to do with retail traders anymore. This is that institutional transaction, those psychological levels, the efficiency of transactions. I guarantee you a lot of sellers got filled up there. But now we got to watch where this bar will close going into 8 a.m. because here it is. There's the close. Okay. So quickly, green to red. Watch. Okay. So it did close above. Now it's retesting. Will it quickly get rejected? And will we have maybe an 8 a.m. push to the downside? Let's see, prior to COMEX, or will it come back above here and close above here? Now you see the buyers are buying at 8 a.m. Now they're transacting where we had this zone, okay? The only reason I made it red was because that previous bar did technically close below it, okay? So it could come back up, but then what we look for is lower highs. Here's a big point of interest right here. where you got a body, and a wick, like right around here. This 3,348 and 99 cents. So you see how it's coming in here right now? Let's see if it gets a lower high rejection. It could be kind of like a double top up here. If it does come up like this, come up, back down, we're coming back up. Let's say it gets rejected back down. We could look for a move like that and sell into COMEX, right? So we got to watch here. This candle, I could be completely wrong. As I'm saying that, this candle is coming up all the way back up. Maybe it closes above here, and then we're coming up for a new high of the day, okay? So you got to kind of just continue to watch where these bodies close. If you want to go in right now, that you definitely can. You could either sell or buy prior to this candle bar closing. That's fine. But you got to understand it's impulsively trading right now with no confirmation. I don't know where this thing is going to close. It might close down here. It might close right here. It might close up here. I'll figure that out when it closes. But right now, you know, if you don't know what you want to do, then just wait it out. Let the other traders transact while you watch on the sidelines. Okay. So this is 8 a.m. And look at it. Look how strong the buyers are still asking to trade at the highest point of the day, okay? So remember what we got marked up here. This 3,352. Maybe we'll get a reaction there, maybe at this high of the day. Sorry, I asked again, is anyone in buys or sells right now? I didn't. I guess I missed when you guys were letting me know. Sergio, you're a buy from 3,325. Wow, nice. Okay, guys, look at that. Look at that big rejection right below the high of the day. Okay, now we got, let's watch. Okay, that's a big clue. Look, it came up there, bullish, got right just under that high of the day. So that is technically a lower high. They did not create a new higher high. And look at the sellers right away. They rejected that big move coming down. We still have bullish volume still left in it. Okay, so this candle could definitely flip like a bearish pin bar or a shooting star and continue to come down. If you're willing to wait another minute and 20 seconds, if you can hold off and control yourself, maybe we'll see exactly where it will close. Okay, but that was a big rejection. Okay, that was a big bullish candle that came up there right near the high of the day, and they slammed it back down. But it's still building right here. Okay, so will the buyers close it above the red zone? Will they close it below here? But I'm just doing a little bit of analysis myself. Like it came up there and then they rejected it back down. I got to make a note of that, okay? Okay, look at it. Now they could exhaust that entire body volume. They came down, but then look at the buyers are still asking. So, you know, they're still there. Wow. Okay, they're still pushing it right back up. Okay, see how strong they are. So even if you're trying to sell against this, you see how strong the buyers are still. Extra clues, you're on buys on DAX and oil. Nice. Rob Mac, close off sells on GU. Amazing. Okay, guys, look at, so we closed in the red zone still. Okay, so technically, you know, where I placed the zone, it didn't close above there. So I'm just going with my zones. Okay, maybe you guys made a different zone and it did close above or below, but regardless, it's still in there. So I can still make it green, you know, like it's still holding. Okay. So now I noticed a lot of wicks. I see a rejection there, a rejection there, rejection there, another rejection. Okay, so I know that there's a lot of sellers up here. I can tell by the rejections. Okay, so sometimes maybe if it pushes down, you might impulsively move with the momentum. Otherwise, you gotta ask yourself, do I want to wait for the body to close? Another thing that you can do is you can go to a lower time frame, like the 1 minutes. You see the 1 minutes now? That's a 1 minute shooting star candle breaking that green zone. It closed right there. Okay. So, you can jump in on a 1 minute candle. Like I'm gonna go in on a sell right now. Okay. Just to show you, I'm going in on that 1 minute. That 1 minute candle closed below. It's an ignited bearish 1 minute candle. You could definitely fill those wicks and drop. Now what I do is I go back to the 5 minutes. I'm already entered, and I'm gonna place my stop loss above like 5 minute structure. So I could go like all the way, placing my stop loss at the high of the day, kind of protecting it right there. And then I'm looking to come back down to this daily point of interest, maybe break down to there. Okay. So I'm going to sell on gold. I entered on that 1 minute candle, guys. I got to go to the washroom really quick. Sorry, guys. I got this kidney stone problem I have, and I just got to go to the washroom. I will be right back. I'm in this trade. I'm telling you guys straight up, I got my stop loss above this high of the day, and I'm in a sell. Okay. I got to come right back, guys, before I pee my pants here. I'll be right back. 1 second. Hey guys, sorry about that. I'm in drawdown on the trade. Okay, so again, I'm in drawdown, but there's multiple rejections. We're about 7-8 minutes away from COMEX market open, so just hopefully we can get some closing red volume down here. Maybe a push down prior to COMEX. Let's just see. Okay, so I am in a sell. Okay, so that's a big shooting star candle coming down. Almost came, I just put my stop loss above the daily high, above that wick. So you see it came up there really strong, okay? But lower high, push down. We got that shooting star candle. Let's see if it can break some lows right down there. So, like I'm in a sell, so I want to break some new lows in order to get those lower lows and lower highs. I do see a lower high, lower high, lower high. Like even if you're just kind of, connecting the dots, if you want to connect them from those wicks, you can. I kind of connect them more where there's like structure of volume, like right here. Okay, and this candle is going to close in a minute 20. Okay, so it would be fantastic if we're to close like this with this body of volume. Maybe we could open ignited and continue to push down. However, if we do get this body of volume closing below here, we're going to switch our green to red. Okay. Okay, just measuring the move, right? Whoa. Okay, to that daily point of interest, that's about 20 pips down there. Okay, but let's see how we close. Okay. Right, and it could easily bounce off of that daily point of interest, that yellow line. So it could definitely come right back up. We see how strong the buyers are. So there's probably a lot of buyers right there at 3,345. But even if we can close with selling volume below that, we could maybe cause a significant push to the downside and maybe come down into this green box soon. Okay. I'm waiting for this body to close to start reducing my risk in the trade. I just want to see where this body will close. Okay. So that's roughly about 25 pips, 25 pips down to the lowest point of the candle. Okay, here's the close. So we did in fact close below, green to red. Okay, ignited bar, short wick, pop. Okay, I'm going to a break even now. Okay, I'm at a break even, right? And the only worst case scenario is it could come right back up and hit me at break even. But I'm hoping that maybe we can retest this daily point of interest, maybe get rejected there. If it does come to that, if we got to come to 50% of the candle, it's this red line right there. Okay, I can adjust it a little bit right there. And I'm looking to see if it can trade back into that green box without hitting my break even. But I reduced my risk in that trade. It was in a little bit of drawdown. Now it's at no capital at risk. Just seeing if the sellers can continue to absorb quickly and push it maybe one more leg down. And I know that COMEX is opening in 4 minutes. So this is where the volume is going to start to really fluctuate. That's why I'm at a break even, because I don't want to come all the way through here and start breaking for a new high of the day. Okay, I'm right there. I'll verbally let you know as soon as I get stopped out. But I have no risk involved right now. So now we're retesting approximately 50% of that big bearish candle. Okay, right in there. And my break even is right there where I'll get stopped out. Oh, I just need one big seller right now to come in and just absorb this volume and push this body of volume down. Come on, one time. I did run almost 30 pips. I didn't do anything. It was too quick, so Shit happens. And then you just gotta get ready for a COMEX market because it's gonna be in 2.5 minutes. Should I change my break even and put it like a stop loss above here? What do you guys think? You guys tell me. Was the break even too tight? Lisa, you adjusted yours? I'm thinking, but maybe I'll wait for COMEX market to open. Stop loss above daily high. Oh, okay. Yeah, no. You guys are good up there. Yeah, I'm about to get stopped out. It's okay. I can just continue trading right into COMEX, right? No win, no loss. It's just a scratch. I'm cool with that. And it goes as a break even, no big deal. But then I can continue to follow and trade with the volume going into COMEX. I'm hoping I don't get stopped out. But you can see, I'm almost there. Like that's a pretty big bearish body of the candle. So, if they can't hold this buyers down with that candle, then definitely the buyers could continue to come back up and maybe close above here, and then COMEX could continue to go bullish. So I kind of don't want to be involved in that. Here we go. 1 minute to go. Shit, you never know. Maybe they could kind of exhaust these buyers and then drop it during COMEX. We'll see, but it's going to come close. I'm saying for me, it's going to be really, really close here. And sometimes they tag you out and then it runs in your direction. It's just the way how trading works. Don't get pissed off. Don't get frustrated. Don't revenge trade the next candle. Just keep a clear head and stay focused. Got to understand this happens. The thing that keeps me like always knowing that I haven't lost any capital. I haven't lost any of my money. Okay. I gave away some profit. Yes, that's okay. I'll find another trade. I have all day Friday to find another trade. Okay, I'll verbally let you guys know. Mine, yeah, there. I got tapped out right there. Okay, so it's a break-even trade. No win, no loss. And now here's COMEX. So look, it closed right near the high. They opened it ignited. Watch, I'll jump right back in. Okay, so it opened ignited. Let's see if they sharp rejection if they do push it down. However, if it does continue to come up here, could fill those wicks and take out a new high of the day. Okay, so remember that ignited open? It came up, pushed down, that body of the candle got me tapped out, but this is COMEX now. Okay, so there's another rejection. So those buyers, you see, they came in right at that daily point of interest yellow line. It did close below. That's why I kind of thought maybe we were going to break down a little further. But that candle came right back in. COMEX led into COMEX. We got a bullish candle coming right back up. So again, we just got to play these zones out, okay? And guys, just understand, if this candle bar closes above here again, I'm going to flip this red zone green because it might retest this and continue being bullish. Like, if you are selling, you are counter trading the bigger move. Sorry, SST signal says buy at 3345. Yep, no, I was selling from up here, just a scalp sell. Okay, I'm not looking to sell and hold it for like an investment on a sell on gold. I'm just looking to scalp right there. I dropped 30 pips. I didn't do anything. It was my fault. I should have closed out 80% down there. I was expecting maybe going into COMEX drop a little further. It's my bad. Okay, I understand. So SSD signal says buy. You should be buying. You're absolutely correct. I was just looking for a scalp sell. That's why it's hard to scalp live. It's hard to scalp live. I'm telling you the honest to God truth, and it's really difficult to scalp live. I don't know. When we first started, it was very easy for me because a lot of people wanted to learn how to scalp. Now it's taken the fun out of scalping for me. Because I'm trying to hold for bigger moves, and 30 pips is a great scalp, but I'm looking for more and more, and I'm not following my plan. Regardless, what's just it's not Colmex, COMEX, COMEX. Commodity is short form abbreviation for Commodities Exchange. This is the exchange from 8:20 to 1:30 p.m. Monday to Friday that opens, and it's an exchange dedicated for precious metals, gold, silver. That's their exchange. Okay, like how Wall Street opens at 9:30 every morning, Monday to Friday. That's the stock and equities exchange. COMEX is the exchange for gold. Okay, so it came back up there to that red line, got pushed back down. Here's the close in 60 seconds. Okay, so just again, watch where this body will close. Okay, see how it's finding support at that red line. It got rejected at that red line. We've got our short-term points of interest identified. Yeah, I won't continue selling because SST, you're correct, has a buy signal. So I don't want to go against that. But I'll look to be a buyer if volume comes back above here and closes. And then you could see maybe some accumulation, some consolidation here. You got a bearish bar, you got a bullish bar. You got a bearish bar, it could kind of just, continue to accumulate here. And then maybe we got to wait till 8:30, okay, which is in 5 more minutes. Now you see buyers and sellers are accumulating. You can see that the range of the candles has significantly opened up from like these bodies of candles. So you can see that the COMEX market open has brought in additional volume into these 5-minute body candles. Man, I like the sell setup, but I don't want to go against, like you guys said. But regardless, guys, if you're in a sell or looking to sell or in a sell still, remember, if you get down into here, okay, got to consider doing something down there, right? Because you're coming into a bigger demand zone. So like from this red zone down to there, it's about 30 pips. And then coming down in here, you're looking about 55, maybe 60 in there, okay, if it does come in there. But that's where we had that big rejection that started that move that hit the high of the day. Okay, so there's probably significant pending buyers waiting in there to get back in. But we're just kind of consolidating in here. If you're not in a trade, I would recommend waiting till at least 8:30. 8:30 allows 10 minutes for COMEX to open up, get some volume in the market, and then a new 30-minute candle. So again, just quickly, do we have any North American news at 8:30? We do have some Canadian news, red folder unemployment change and unemployment rate in Canada. It's significant news, but not so much if it was US red high impact news. Okay. And then now we're kind of barcoding. Bullish, bearish, bullish. And we're going to stick to a plan today. Regardless of what's happening with gold, at 8:45, we're going to move over to US indices. We're going to start off with NASDAQ, do a nice analysis for about 10-15 minutes till 9. And then we're going to, from 9 to 9:10, 9:15, we're going to do a good analysis top down on US 30. We're going to bring them together. Then if anyone needs to go to the washroom or grab a drink or have a smoke, come back, you got time, and at 9:30 Wall Street market opens up, okay? And then we'll have all three charts done. Gold, we've been watching gold for quite a bit, but we got to do a little bit of NASDAQ and US 30, okay? And then that's going to be focus for Wall Street. So we're not flip-flopping. Okay, notice also, like, I consider this to be like a bottom in here. The big like neckline up here. Coming back down, again, could bottom out here, create a second bottom, come back up, close above here, retest this, and gold could easily be driving for a new daily high and breaking above 3,350 up there. And guys, when you see right now, it's just kind of, there is technically sellers in the market and there's buyers. Okay, that's what is going on right now. That's why there's this consolidation now. It came down bearish, came back up bullish, bearish, bullish. I look at also the wicks. You got a higher low as it's coming up, but you got a lower high and lower high. So it's in this pennant. So it could definitely squeeze back up to the upside. And sellers could also continue to absorb and break it down. But overall trend, if we're looking for the trend, it is bullish. Okay, so that's what I mean. That big candle now that just opened. Okay, it just opened like that. It opened, ignited, and just pushed for the first 10 seconds on open. Okay, you could definitely go in on this candle, or again, go to the 1 minutes and watch. You see how it just only, look at the 1 minute. It's beautiful double bottom down in there. Okay, so if you sold, that's why I like scalping 1 minute candles, because they're very clear. They show you when it came down there to that zone. That's where I was in that 5 minute sell, and I didn't do anything. And then you see how quickly it came up with an engulfing candle, consolidated, and continued to drive. So look, this 1 minute candle is about to break the high of the day, and it's closing right now in 10 seconds. So if this closes, right, you're going to flip this red zone back to green, okay? If you want to follow 1 minute candles, you can wait for a retracement to come back down in here. You could judge where 50% of this 1 minute candle is. It's relative close to this red line. We closed right at the high of that 1 minute candle, and you got a new continuation, ignited candle that just opened. Now look at the retest coming down, right down to there, okay? So will it hit in 50% and flip this and then maybe continue to buy out of here? And then you got gold continuing to go, breaking daily highs. You can go back to the 5 minutes, and this is what you got. That 1 minute candle, that all of this was the first 1 minute candle at 8:30 that broke for that new high of the day and got rejected on the next 1 minute candle, like right here. So all of that was right at 8:30. And then you see how it's a nice, like this. It came down, one bottom. There's the neckline, second bottom. It came all the way, broke, okay, closed above. So if it does technically retest this, you're retesting support and could continue to go up. It retested the red line. You see how our red line is still holding? The red line is our 5-minute point of interest, and the 1-minute candles are still respecting it, okay? Now you could kind of flag up here and continue to go to the upside. If it continues to break up there, I'm going to look for a buy, okay? So I'm going to buy on this 1 minute. I'm trading 1-minute candles now. I'm not even looking at the 5-minute. I'm trading this 1-minute bullish flag, and I'm looking to see if it can drive back up to that identified red zone that we have at 3352.25. I'm going to place my stop loss below that green zone, allow in case it needs to come down, maybe pick up more buyers and continue to push back up. So I entered on this 1 minute frame. I could watch where this 1 minute candle is going to close in the next 10 seconds. Okay. And I can measure the moves on the 1 minutes. Okay. If it comes in there, you're looking about 20 pips in there. Okay. There was the close. Did we get some volume closing above? Yes. Do we have a bullish flag pattern on these 1 minutes? Yes, we do. Can we continue to hold this flag pattern and maybe continue to go to the upside? There's the consolidation. Okay. And then if you want to watch full thing on the 5s, you can definitely watch it on the 5s. Okay. You saw where I bought in on the 1 minute. There's that kind of 1 minute flag pattern in this box. Will it continue to hold? Can we continue to break? Where will this 5-minute candle close? Will we close above the previous daily high? That's going to be in 90 seconds. So we can go right down to the 1 minutes and watch this thing. And then I'm looking for maybe a break above there. Okay. Okay, and then you can follow 1 minute bars. Okay, bullish, bearish, bullish, came back down bearish, grabbed a wick. Can we maybe close with a little bit of blue volume above here, or a seller's going to push it down and close it below here? They definitely can. Okay, so it closed again inside here. See how consolidated the 1 minute candles are? But this is going to close. This final bar is going to close into the 5 minutes. Okay, so can we get this 1 minute volume closing above here? We're going to open a new 5-minute candle at 8:35. Can we get that continuation to the upside? Are we going to continue to fill this daily candle and get it to this point of interest area, this 3352 area? Okay, so I'm just following these 1 minute candles. And ultimately, this is closing this 5-minute bar up here, okay? So here's 10 seconds to go to close. The 1 minute candle did create a new high. That is a new daily high up there. Here's the body that closes. Will we open ignited, bullish, continue to drive? We've got a wick above us. So again, it closed with a little bit of volume there. This is the new 5-minute candle. There we go. Okay, so this is riding the coattails of this 5-minute candle. Notice how we got some volume closing on the 5-minute above that daily high. We opened bullish. This is the 5-minute volume driving right into that box. Okay, I'm going to a break even too on this. And okay, so I'm at a break even again. I might hit another break even. But there's that 25 pips. We can continue to break out. Let's see. Okay, so this was all traded on the 1 minutes. Okay, see how quickly you can get 20-25 pips with minimal to zero drawdown. Okay, I'm closing out 80% there. I'm not playing games no more. I'm closing out 80% right there, grabbing 80%, leaving 20% running. Okay, I want to grab some money. Okay, so 80% there at 25 pips. And then I'm at break even for the remaining 20. So see that big sharp rejection below that red zone. So we cut through it impulsively. They closed it right below. I wouldn't be surprised if the sellers bring it right back down and retest this. Okay. And then that, unfortunately, is going to be my 20% break even. But that's scalping. Okay. So I brought that down to the 1 minutes to help you guys understand. You can go from 5 minute, 3 minute, 1 minute. You can enter on the 1 minutes and ride the 5 minute. Okay, and then if it comes down there, I only have 20% running at a break even. So I closed out 80% on that bar. When you trade 1 minute candles, they teach you a little bit more discipline. I'm still invested in this trade. I got 20% running. Hopefully this bar continues. Let's watch. Will it close above there? That's why I love watching 1 minute candles. They're fascinating. Look at, there's the close. We created a new higher high. The volume is above there. Flip the red zone green. Let's flip it real quick. You got to be quick with these. So it did close above there. See, I was so late to even flipping it green. But regardless, now the sellers opened ignited bearish coming in here. Will the buyers bring it back up with a higher low and continue to build off of this? If you go back to the 5 minute candle, this is what you got. You got that new high up there. That's the new high of the day, 3353, and getting rejected. But you still have this base of volume that could continue to come back up. But this bigger candle below us, that 5 minute candle, that opening close, 50% is right there. You see where it's at the body, the wick. If it retraces back into here, this is where I think the big buyers are going to be. Like, not the big high time frame buyers, but these. If it retraces back down in there, I think that's going to start the move to continue to go up to the upside. This box right here, okay? That has the sharp rejection. You can see it. It's an inverted hammer candle. It closed below. That's a bearish engulfing 1 minute candle. Closed below that zone, green to red. And the sellers are probably going to push it right back down to where I entered. But thankfully, I locked in 80% up there, and I only got 20% running right there with a break even, okay? Which is, I'll verbally tell you as soon as I get taken out. Lookman, that was the first time watching 1 minute. It's fast. There, I just got taken out on the 20% break even. But thankfully, I grabbed 80% out on 25 pips. Okay? Scalping is fast. Like, when I mean scalping, I mean 1 minute scalping is fast. It's not for everybody. I understand that. It's gotta be your cup of tea in order to trade 1 minute candles. Because you might be in a trade for literally 1 minute or 2 minutes, and that's it. That's it. That's what a scalp is. You can try and turn a scalp into an intraday hold as much as you can. If everything continues, like if it continues to create higher highs and has 50% and respecting, yeah, you can turn a 1 minute trade into a 3 minute, 5 minute, 10 minute, and maybe catch a move. But that's how it works, guys. It's not for everybody. That's why I say it requires a lot of practice to do that stuff. Okay, let's go back to the fives because I understand everything is very, very fast. Now, that's a massive rejection up there. Okay, did we have this red box identified for a specific reason? Yes. If you joined us on the call, we came all the way to this level right over here from July 1st. Also July 2nd, also July 3rd. What's the date today? July 11. Like, that's how far back we had to come to figure out this resistance point. And is it still resistance? It technically still is. So now we're retesting this area here. But again, wicks. You know, if we break down, could come down in here, and we're trading into that previous resistance area that could be support, okay? Notice the 1 minute candles. See the structure? See this consolidated flag where it was right here, where I kind of, we bought in here on those 1 minutes. See how it retraced right back down? Where? Right into the 1 minute, this area. And look at the buyers are still there, bringing it right back up. Now, when you're watching 1 minute candles, this could produce kind of a double top. There's the one top. We're coming back down. Here's the neckline. We're coming back up into this bigger red area. Will it be a lower high? Will it be a double top? Or are we going to continue to break out? Okay. If you're looking to sell, for example, 1 minute candles, you got to look for a sell for a close below here. Maybe to retest this zone, you make it red. Then it might have enough momentum to break that. And then you're dropping back down to here. Like, look at it. Wow. Okay. So it's continuing to drive. That 5 minute candle is filling. Holy shit. It's filling that big wick behind and could create a new daily high. Okay. So whether you're watching 1 minute or 5 minute candles, guys, 1 minute candles are a beautiful thing. I don't know. Like, I love these things. I trade these things every day, 1 minute candles. I love these things. Why? Because if you go up 20, 30 pips, boom, you can make a quick decision in minutes, and you just got to go with the flow. You got to understand that, yes, you might close out here and then you miss another additional 20. It's all good. It's all good. Scalping, you'll catch another trade. You'll catch another trade. You'll catch another one. That's what I keep telling myself. That's what keeps me sane. Otherwise, these candles could drive you crazy. Okay. Again, look at 3-bar pattern. Okay. Came up, closed right at the high. Look at ignited, continuing to push. If these 1 minute candles can close above this structure, we might continue to push. If it closes above here, this red zone can turn green. While you're waiting for the 5 minute candle, like the 5 minute candle, see how slow it is when you're on 1 minute? The 5 minute candle still has 2 more minutes and 20 seconds to go. See how fast the action is on the 1 minutes? But you gotta really have the right mindset when you're trading these things, okay? We'll stick with the 5s. But if you guys do like 1 minute candles, I love them. Like, we can dedicate sessions to 1 minute analysis, no problems. But you got to have the right mindset when you're analyzing or trading or learning them, okay? Got to understand, I'm not turning a 1 minute scalp into a 2-hour hold, right? Unless I got runners but 1 minute scalping, you got 1 or 2 candles. Boom, boom, boom. That's why 1 minute scalpers have so many trades throughout the day. Like when you guys say you got maybe 2 or 3 trades per day, some scalpers are 20, 30 trades per day. Like you got to understand, like that one candle, you could be buying this one candle. That's one trade. You could have sold that one candle. That's 2 trades. You could have but like when you're scalping, 5 trades, 10 trades, 20 trades is nothing. I've been known to take 50 or 100 trades per day. But I look for good quality trades, scalps. I don't just trade every single candle. I look for good quality A+ scalp setups. Right? Look at that, continuing to drive. If you look at the parallel channel. Look how clean the 1 minute candles are trading. Like, look at, you're following this. They came down. That was that sell, second leg sell. I was the 30 pips. I didn't do anything. Came back up, flag, push. That was that buy, retracement, back in the zone, back in the parallel channel, continued to drive, close above, push a little higher, now coming back down. You see how volatile they are too, okay? But that's why you got to either pick your poison. You got to trade with the trend, or if you're countering, you got to know what you're doing, okay? So guys, it's 8:45. As sad as it is, we're gonna get off gold, and but it is, making higher highs, higher low, higher high, higher low, higher high, new daily high. Move your purple line marker right there. 3,355 is the new high of the day. And yes, we could possibly get some retracements coming back down. But, and then this is where I clean up my charts, okay? Is this still a support area? Yes. Have we traded back into this? No. Is this a yellow line? Yes. 3,345. Is that a point of interest if pullbacks? Yes. I can see when it pulled back in there, continued to drive. Will we come back in here? Possibly. You could be looking for a buy. Place an alert there. What about this minor zone right here? If we break that little 1 minute kind of consolidated zone right here, we had resistance, resistance, resistance. All through that body that closed above, this could be support. So if it comes back down to 3,348.49, you could look for a possible pullback and a continuation buy to the upside. If it closes below here and retests this, you could look to sell from here down to this box. And then when it gets there, that's where the buyers could be to reverse it back up. So I always get in a habit. I know sometimes I don't follow my plan when I'm trading with you guys, but I measure that from there to there. It's 37 pips. 30 to 40. If it comes down there, like how I was in that sell and it ran 30 pips and I didn't do anything, I'm showing you. If you take that sell from there to there and you get 30 to 37 pips, do something there. Do something, because that's where the buyers are. Now we're continuing to break out. Like, look how strong this move is. Don't worry about your RSI. Like, you see where I kind of did that divergence where we were making those highs and it was coming down. See how it kind of gave us a false signal? It was just a little quick sell into support and continue to drive. So that's why I don't rely on this RSI indicator when I'm trading. I follow price action. I follow where bars close. I follow rejection wicks. I do a little bit of wick analysis and things like that. Okay. But congratulations to those that are in longs on this. And if you're on that SST signal right over here, let me just pull it up. Should be running at least 80 pips if my 90 pips if my math is correct from 45 right over here. Yeah, so the trade idea sent out. Okay, so you can see how, yeah, there was a little break below there. It continued push up, came back, held 3,345, kind of that higher low double bottom, and continued to break out to 3,355, which is, if it gets up there, that could be 100 pips, but right there is 80. So congrats to those that took the signal. And again, guys, okay, I'm going to go off the charts because now I'm going to do NASDAQ and US 30. So I trust that you guys are going to do your own analysis. If 5-minute volume closes above, flip this zone green, right? And then above us, 3,357. That's a daily point of interest we got from our top-down analysis, okay? And then if it continues to drive higher, okay, I've got my next daily point of interest at 3,365. But going over this again, from this yellow line to this yellow line, there's got to be some sort of structure in between there. If you're looking for short-term trades, yellow line, keep going backwards, there it is. When was the last time we traded in between that yellow and yellow line? Right there, July 3rd, July 2nd, and July 1st was the tip right there, okay? So do we have some structure inside here? Yes, look at, there's multiple wicks kind of right here. Draw just a line right there, okay? You can see that it came up, back down. It came up, close below, retest, look at multiple wicks in there. Again, one more impulse push and then push down. Look at the number, 3,360. So now you got a little bit of kind of short term. You got bigger, higher time frame, yellow. But if it comes in there, you might get a reaction. Just like when we came into this one. It came in there and got rejected back down, but then we continued to push for highs, close the volume in it. Now we're retesting this. This red zone could be ongoing support for pullbacks, and gold is just gone. It's bullish. Very, very strong move. So your next move is your daily point of interest, 357. That's your inside 50% right there at 360. And then your next daily point of interest is 365. Okay. Congrats. And if you go back to those 1 minutes, like there was that big push. Okay. Double bottom. Look how clean it is. Double bottom, 1 minute, boom, neckline, second bottom, that big bullish bar at 8:30, time and sales, closed above. The flag, that's where I bought, and then got it in there for those 25 pips, pulled back into that flag, and what's the results? Continuing to push for a new high, pull back now into this zone, and we're continuing to drive. Again, if the 1 minute candles pull back, maybe the purple line, where there was resistance, now you got a body closed above, that might be the support at 354. You can maybe continue to buy off of that, right? Oh, good. This is good price action on all time frames. Okay. This is good, clean for a Friday. Now hopefully we do get some good, clean action with our indices. Okay. So again, I talk fast, I know, but I'm moving off of gold. Congratulations to all of those that are trading this and having a good day. This is good volume. Just continue to practice your risk management, protect your capital, trailing stop losses, try and get to a break even as when you feel comfortable, and take some profit out of the market. Okay, I'm moving on to now US 30 and NASDAQ. Okay, so we'll revisit gold just prior to Wall Street, but now we got to do some US securities. Okay, so if you are ready to now learn a little bit about NASDAQ and US 30, let's get ready, okay? Because it's almost 9, okay? So I'm going to start off with NASDAQ, okay? So this is how it's moving on the 5 minutes, right? Let's start again at the highest, not the highest time frame, but the daily. Let's get a daily outlook, okay? So quickly over here, we're in like new all-time high territory. This was the previous double top all-time high supply right there. You can make it red, stretch it into the future. You can see we kind of got volume now above it, June 23. And is the volume currently above it? Yes. So can we make this a green zone? Just like if these were 5-minute candles. We got a 5-minute candle, for example, closed above. If we ever do retrace back down here, we could buy. Why are we not doing this on the daily as well? So if you're a daily swing trader, if it does come back down, NASDAQ comes back down there, 22,100, that could be a swing opportunity to buy and take NASDAQ to a new all-time high and continue to drive. If it closes below here, you flip that zone back to red. It might be a selling opportunity to sell and take out that daily low and drop down, maybe down into here, okay? That is a zone. Place an alert in there and wait for the volume to come there naturally. Will it come down today, next week, or next month? I don't know. But when it does come down there, you should be ready, right? Okay, now let's kind of figure out what's going on with these daily candles above here. Okay, so do we have, what I see is a body, 4 bodies right there. Okay, so easily can identify our all-time high, that wick right there, and bring this across at all of those bodies. Make it red, right? Okay, so I can see our all-time high is 22,945, and it looks like a double top to me. I don't know about you guys, but if it came up, there's the neckline. It came back up, there's the rejection, and the second leg coming down. See, today its lowest point was right at those bodies right there. So I don't know about you guys, but I'll be analyzing NASDAQ and US 30 over the weekend. If we close below here today, maybe we're retesting that, and then next week there's a market sell-off coming back down into here. It could come in there and boom, skyrocket right back out of there. Possibly that's a scenario, but I've got a higher low, higher low, higher low. We're continuing to build. They could definitely flip today's candle and drive for new all-time highs. That's we got to recognize. Do we have a zone right in here? Yes, we do. Okay, a zone of support is right there. Like as if these were 5-minute candles. I would be doing the same exact shit that I do on the 5-minute candles. If these were 1-minute candles, I would be doing the same exact shit. Why would I not be doing the same exact shit on the daily candles is what I'm trying to say. Okay, if I didn't tell you, if you didn't see this watermark NASDAQ 100 one day, or you didn't see I was on the daily and I hit all this, and I said to you guys, I'm on the 20-minute candles. This is a 20-minute candle, 20-minute candle, 20, 20, 20, 20, right? I can make something up to you guys right now. I could say I'm trading the 4-hour candles. You guys would have absolutely no idea, okay? That's the beauty about candlesticks. They all have the same characteristics. So the hardest part of trading is figuring out what time frame you like to trade. That's it. I can't make that up for you. I tell you guys, I'm a 1-minute trader. I love 1-minute candles. No one can take that away from me. I don't care what you guys say. If 1-minute candles are too fast, that's fine. Maybe it's too fast for you, but it's perfect for me. Some of you guys say 1-minute candles are too slow. You need faster. I'm like, oh, hell yeah. Let's dissect the 30-second candles. Let's go to the 15-second candles. It doesn't matter. You know, you got to find what is your comfort. For most traders, 15 minutes are comfortable. 30 minutes are comfortable for intraday trading. For swing trading, why are you even looking at 1-minute candles? Why are you even looking at 5-minute candles? What are you even looking at 15-minute candles for? If you're a swing trader, you're looking to get a position and hold it for multiple days. You need minimum to be focusing on 4H, 4-hour, and daily, and weekly. For swing trading, every trader has their time frames. Stop trading a time frame that's not suitable for you. Okay, trying to make that as clear as possible for everybody. Once you figure that out, you're going to be on your way to success in trading. Stop flip-flopping. Okay, we're not flip-floppers here. You pick what you are comfortable trading. Okay. Our daily candles, what do you guys see? You guys tell me. So you guys educate me. What do you see? I see a big bullish day, July 3rd, and then 2 days of retrace right back down. I see right here, July 8th, and then Wednesday, come right back up. Midweek, reversal. Remember we talked about that. Wednesday, did it reverse Thursday and Friday coming back down? Yes. Okay, so this is what we got going on now on the daily. We are kind of in a bullish consolidated flag. If we look at this, this is our rally to the upside. This is our flag. We could definitely continue to move for new all-time highs, but we got to continue to get volume making. We're not making any new higher highs. Today's high is lower from yesterday. It's lower from Wednesday. So we got to get buyers of NASDAQ to continue to create some highs in here. Maybe create a new higher high. Come back and retest this and we're flying, okay? But maybe the markets now are cooling off again. Trump is in the market talking about tariffs on a daily basis. Okay, he's extended it to August 1st. Kind of gave relief. That's why we had this nice rally. But tariffs now, again, you get a tariff, that country gets a tariff, everyone gets tariffs. Markets do not like tariffs. Stock market is selling off right now. Gold is bullish right now. Bitcoin, all-time highs. Oil, you guys tell me what oil is doing. Some of you guys are trading oil religiously, like every single day, and you guys are doing fantastic with it. So, liquidity moves from one security and goes into the next security. It moves from one security, goes into the other security. It's just, you got to follow that flow of liquidity. And also follow your US dollar as much as you can, okay? And now we're going into 9 a.m. Okay, so you're going to see fluctuations in securities. Now, what I do is I follow the daily candles. So let's just give a recap of quickly what happened yesterday. We opened right here. It came up originally bullish. It's a lower high from the all-time high, technically speaking, and it pushed down. Sellers pushed it down back to the open. It came all the way down there. That was the lowest point yesterday and came right back up and closed with some bearish volume. Now, let's go over our points of interest. Where did we close yesterday? Where did we open today? Right there. Was there any gap up or gap downs? No. It just closed and opened right there. Was today bullish or bearish on open? It was bullish. It came up. It was bullish, 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 right up to there. That's our highest point of the day in that red zone. And is it higher than yesterday? No. You can see it's a lower high from yesterday. It's a lower high from the all-time high on Wednesday. Okay, so sellers the last 3 days are offering to sell NASDAQ down. And they're being successful at it because they're creating lower highs. And then it came back down to where we opened, and the sellers had full control of today's candle, pushing it down, pushing it down, pushing it down. Did we take out yesterday's low and this point of interest where we opened on Wednesday and where we closed on Tuesday of this week? So anywhere around here, either yesterday's low or these bodies of candles, make sure you identify this area. Okay, I don't care where you place your line, whether it's yesterday's low or at these bodies, just place some type of line there for reference. Okay, and what happened today? It continued to break below that, and we created a low of the day where right inside that green zone right there. Okay, and then I look at the low of the day. It's higher than Tuesday, and it's higher than Monday of this week. So if I look on the weekly, it's creating a higher low. And what's happening? The buyers are there in that green zone, and they're coming right back up. They're pushing up all that selling pressure right back to that point of interest, and they're above it right now. So this point of interest yellow line is going to act as support on any lower time frame currently. And unless the volume gets below that, then it will turn again to resistance. So now, the buyers have a lot of hard work to do. Look at the size of the bearish candle, the body. The buyers have to flip this entire candle, come all the way back up, and then they get to the opening price. They could turn this into a hammer candle and get back to the high and then break out for a new all-time high. But you have this big body of volume. Okay, so now I have the yellow line and yellow line. If I want to find the psychological midpoint of this volume right now, I can guess that half of it is right there. Okay, and guys, I haven't smoked any weed for a couple days. I'm battling with a lot of pain, and I've decrease my weed smoking, and I can still figure out 50% right there. Let's see how accurate I am. Grab your Fibonacci tool from that one yellow line. This is called tape reading. A lot of traders, old school traders, read the tape. I see a lot of new traders don't read tape anymore. It's like, it's a rare breed if you read tape. And I would love, if anyone can admit to me that they are tape traders, I love you guys, okay? Because it's a rare breed that's dying these days. Everyone is a SMC, ICT, bullshit trader, whatever you do. This is old school technique, and old school does not fail. This technique has been around for 50 years, 100 years since the stock market opened up, okay? This used to be a pen and paper. A lot of people don't even write notes anymore on pen and paper. So this is a really, really technical way of trading. It's finding the psychological midpoints of the auction, okay? So what I just looked at, from this yellow line to that yellow line, that's 50% exactly, okay? So if we're coming from this yellow line, it's like a magnet. Maybe it's attracted to come back up to this price, and when it gets up there, it might get rejected back down. However, if we move above this one, we might continue to move to the next yellow line. But you got to go from one point to the next point, okay? So I've identified it now, right there, okay? 22,788. Now I got a couple points of interest on my daily candle, but I don't want to sit and watch this daily candle all day today. I want to maybe take some trades. So let's maybe go into the 1 hour, okay? So now you see the hourly candles. Is there an abnormally large bearish hourly candle that's sticking out like a sore thumb? Right there. What time is this? Thursday, military time 20. That is 8 p.m. Eastern. That is the futures market open. Okay, so NASDAQ was slowly coming up, and then as soon as the futures market opened up, it made the high of the day and just a drop all the way down to the lowest point of the day. So that 1 hour dictated the high and the low of NASDAQ right there. And can we identify, if you want to go now into the hourly, can you identify 50% of that hourly volume? It's this easy, guys. Grab your Fibonacci tool of that hourly bar right there. Notice what I did from where it opened and where it closed. There's the white line, half of it. 22,801. Nice psychological number, 22,800 on the dot. Now there's my zone of that body of that point of control of that hourly candle. Can we identify the zone? It's this easy. Go one ratio above and one ratio below, okay? There's my zone. Is it bullish or bearish? Obviously, it's bearish because look at the size of that bearish candle. Stretch it into the future. Now I can clearly see how we were trading in it at 11 p.m., midnight, 1 a.m., 2 a.m., and London push down. Stretch this into the future. We might be coming up here in Wall Street. Maybe we get rejected and it's a second top up there, okay? Get rid of the Fibonacci if it's too many lines for you. Now do you guys see what I see here, okay? Now walking into Wall Street from futures market, we had that big dump where it came down. It retraced right back into 50% there in that pocket. And then what was the result? It came back down, okay? Now, we could come back up there. Let's say, for example, we come back up. I see two tops and then could reject back down, and we're selling back down to the lowest point of the day, maybe coming down here, and maybe we got a selling day continuing out of Wall Street. However, if it comes in there and maybe closes above here on the hourly, we flip that, invert that red zone green, maybe hourly turns bullish, and then Wall Street, we could be coming right back up. It's a bullish Friday, going into the highest point of the day, and then we're driving, getting ready for new all-time highs, okay? News, depending on everything, depending on what Trump is spitting out of his mouth all day, could affect everything, okay? So now, that is still a zone above us. Have we traded into this? No, we haven't. So it's pending in the market above us. Do we have any other structure on the hourly? Right now I can see it's pretty shitty. 7 a.m. we opened up, closed right there. 8 a.m. we came back down, came back. So look at these tiny consolidating candles. So we're going to get more volume. I believe it or not, it's going to be a lot of volume coming in the next 25 minutes in Wall Street. But right now we're kind of consolidating. So
we're at this daily point of interest. We're still holding hourly volume above it. So technically, it could come up bullish back up to here, but we've got a lot of bear structure above us on the hourly. Okay, you can see it's coming down, lower low, lower high, lower low, lower high. We have not created any new lower lows, so it is building slowly. It's consolidating. Now, what I do is I go into the 5 minutes. Okay, one more thing that I'm missing is a key hourly point of interest right here, where that body closed at 5 a.m. and where that body opened at 6 a.m. See, the bodies are still holding, so I create a white line there. And look at the number, guys. Okay, I didn't just look at the number. I looked right there where the body closed, where that one opened. That's a structural area. Since then, we've been making higher highs off of it. The number is 22,701. Okay, 700 psychological number. That's where an auction likes to trade, transact. It's efficient down there. It's holding down there. Will we ever come back down there? If we do, we could possibly look for buys off of that white line. Unless the sellers close it below there, that white line might be resistance, then we sell the white line back down to the purple line, to your trading tape, to the lowest point of the day. If it continues to break, we look for our next tape below us, okay? Now, what I do is from the hourly, you can go in the 15 minutes. If you're a 15-minute trader, 15-minute traders are making their structure as well. You see the big, there was 8 p.m. to 8:15, 8:15 to 8:30. So there's the big drop. Now we're breaking it down into 15-minute increments. We can see the 15-minute candles, how they came right into that red zone. And what was the result? They pushed back down. We can see the 15-minute candles, how they're reacting at the hourly white line. They're holding. Look at, we got a wick support and continuing. 15-minute candle is closing above that daily point of interest, continuing to push up. But that's as high as the 15-minute candles. If you're a 15-minute trader, you can make your own tape for a 15-minute right there. That would be your point of interest on the 15 minutes. 22,757 is holding resistance. Okay, I'm not a 15-minute trader. I apologize. I'm more of a 5-minute, 1-minute trader. So what I look at is the 5-minute structure. Can I see some structure on the 5 minutes? Yes, I can. Right up here. Okay, you see a lot of bodies. There's a body, a body, a body, a body. There it is, that 22,757. I showed you how it looked on the 15-minute. This is how it looks on the 5-minute, okay? And do we have some 5-minute support right now? Yes, we do. Right here, right below the yellow point of interest. It dropped, and that's as low as it went down to, 22,722. And now we're just, if you want to trap this entire area and you say, fuck it, I don't want to trade any of this shit, say what I just said. Fuck it. I don't want to trade any of this shit. This is what you can do. You are smart enough to understand that Wall Street is going to open and it's not just going to trade in here all day today. Okay? If you're patient and you want to make some money today, listen to what Uncle Ronny is saying. The market is either going to make a move breaking out of here. It could be an impulse move. Okay? You got to understand. It could be an impulse. But regardless, whether it's an impulse or whatever it is, if a body of volume closes above here, it could come down to retest this area, 757, because it's resistance there. It could turn to support. You could look, if you get your confirmations, you could look to buy off of there and scalp it back up to the yellow line. Maybe you're trading in the red zone, maybe you come up there. But that could be a possible buy trade, okay? Also, on the flip side, you could get faked out. The market always fakes us out on a daily basis. What is a fake out? You could get a move coming up there impulsively, and then before that 5-minute candle closes, it gets rejected with a wick and closes back below there. That red line, 757, is resistance, and then they're dropping it back down to there. And you just got faked out of a buy because you entered on impulse. If you patiently wait, you can wait for the candle to close, and then you get your confirmations. Okay, that could be to sell 757. I could do the same shit for the opposite direction. If it pushes below there and closes below, it could retest 720 and drop down, break that hourly support and drop down to the lowest point of the day, right? And they could also fake us out also. What happens if it impulsively breaks below there and it's a wick that comes back up inside here and it's using 720 as support, and then we're coming right back up to here, okay? And that's the consolidated zone. You can stretch this thing into the future as far as you want, but I don't think that NASDAQ is just going to continue to trade inside here. It could, and it gets real choppy, but just have some rules when you're trading. Try to follow the highest point trend as much as you can. If I'm looking at the trend, what am I looking at? I'm looking at this huge selling pressure from the futures market open. I see the buyers were there. They pulled it right back up there, and then it pushed down. But it's not making any new, look from the lowest point of the day. That wick is a higher low. That wick is a higher low. The structure is a higher low. That last wick is a higher low. So it looks to me like the buyers are slowly building the bottom of this market leading into Wall Street. Okay, we are ascending. But we still have to acknowledge that we got a big block of sellers right there. So yes, it could be bullish and come right into there, but it could come tumbling right back down. What does that look like? That would look like a double top where it came up there. That's all one top. This is kind of like your neckline coming back in right in there. Again, second top, then they drop it down, right? Just try and predict the pattern before it happens. It can kind of give you a little bit of a bias, okay? So this is what's going on with NASDAQ right now. Okay, we'll continue to watch it. Also, if you want to draw a trend line from up here, try and connect the dots as much as you can, okay? That's pretty much, I connected the dots right there to that wick, to those wicks and bodies, to that. So we're in this channel right now. Yes, it could break out bullish or it could break down bearish. What time is it? 9:15. Oh shit, I gotta go a little bit faster. Okay, that's our daily bar indicator on NASDAQ. Okay, so you know that it opened, it made a high, it made a low, and this is where we're at right now. You can add some EMAs, 9. You know, it gets kind of gets busy when you start adding a lot of EMAs and shit like that. But there's the 9 EMA, the green line. There's the 200 EMA. Okay, so that's NASDAQ, guys. Did you guys understand that analysis? Everybody? Did you guys understand that? Red clues, you're old school? My man. Yeah. If you're in your 40s, 50s, 60s, you got to be from the old school generation. Everything was better in the 90s, okay? And I'm saying that with facts. Sports were better. NBA was better. NHL was better. NFL was better. Music was better in the 90s, okay? My son is listening to some hip hop music today, and I'm like, what am I even listening to? It's just, I don't even understand a word that they're saying. It's just, they're just mumbling. Like when you listen to hip hop back in the day, they actually enunciated the words that they were saying. You could understand. There was good beats, everything. Everything was better in the 90s. Kids were outside playing soccer, playing basketball, riding their bikes, you know, just hanging out at the malls, being mall rats, all of those things. Now it's nothing. My kids just sit on their phone all day and just play video games. I'm like, go outside and just be a freaking kid. Go outside and have fun. They don't want to do anything. Old school, the best. So if you're 40, 50, 60, or 70, if you're in your 20s, I'm sorry, guys. You guys are missing. You missed out on life. You guys missed out on a lot of good stuff. I have kids, so my son is 14, my daughter is 9, and I tell them every day, you guys missed out on a lot of life. You guys were born in the wrong generation. Okay, so I'm going to do now a quick analysis on US 30, okay? I'm not going to spend as much time like I did on NASDAQ because we got to get ready. It's 9:15. Okay, so daily, watch. Now, I'm going to do this really, really fast, okay? I'll show you how I can do a top-down in less than 5 minutes. You guys can time me, and I'll still explain what's going on. There was the second top all-time high of US 30. US 30 is kind of like a snail behind NASDAQ and S&P. So you can see it got right back up there and rejected. So we haven't really broke for a new all-time high. Our all-time high is 45,091. Is there a zone? Yes, you can see right now. Like how much more clear do I need to explain this? Look at right there. Where it acted as resistance there, turned to support there, back to resistance. That body closed above. Look at the body volume, closed right there. A lot of wicks rejected. That's got to be a red zone going forward. Now look at, we're trading right into it. So it's got to be a green zone right now. and stretch it into the future, okay? Do we have anything below us if we drop? Is there any other points of interest? Here's a big one that you should maybe look at right there. It was a neckline. Anytime you spot a neckline, it came down, back up, rejected right there, came down, looks like an ugly double bottom, but made its way back up, closed above. There's your confirmation. There's the blue body that closed above. Look at the retest. 2 days later, retested. Bring this zone into the future. There it again. When it came back in the green box, it was holding support. That body of volume closed below, and that's where the market dropped. That's where you can make it red. I'm not doing that right now because I got to continue going. But stretching it into the future, there was that daily body that closed above. There's your ignited pop with no wick. That's how you can, if that was a 1 minute candle, if this was a 1 minute candle that closed 98% right to the high, and the next 1 minute candle open ignited, I would be buying this 1 minute candle 110% of the time. Why would I not be buying a daily candle that does the same shit? Okay, so swing traders, you gotta understand your price action. You gotta have a playbook in your head. You gotta understand every single setup, and the way how you understand it is with practice and watching these things. Okay. We explain it every single day. What an ignited bar is with a short wick. It's your firecracker. Some of you guys had 4th of July and July 1st, firecrackers in your backyard. Believe me, there was a guy that burnt his hand. I saw in the news. He had a fireworks in his hand and he lit it in his hand and it blew his entire hand off. Okay. That's a guy that was trading a firecracker candle. Okay, so that's what it is. It's got a short wick. He lit it. It blew up. Unfortunately, it blew his hands. But he learned his lesson now, I'm sure. Now, when he's trading, he only has one hand to hit the buy and sell button with. I learned my lesson too. When I was a kid, I was playing around with firecrackers. My cousins got me. Then I learned, or stupid me, it blew up in my hand because it had a short wick. Then when a firecracker had a longer wick, I learned you can light it and it takes time for that wick to, I could hold it longer, I could throw it away, whatever. But you learn. Candlesticks are the same shit. Same shit. The wicks are like a firecracker. The long ones that have long wicks take a longer time to build up. That's why I always say, take a look at the size of the wick because that's the exhaustion. Does the wick have a big wick or is it a low wick? That's why I sold that gold move today because it had long exhaustion wicks. So that's what I'm trying to recap why I took that trade. Also, the 1 minute buy I took had a short wick and a pop. So that was, and now, okay, sorry guys, I could talk all day about firecrackers, but look at what pattern we got going on. Okay, right there we hit kind of all-time highs, pull back, there's your neckline, there's the support, we're coming back up, but look, lower high, lower high. There it is, like it wants to come down. It's kind of like, that would be a technical M pattern right there, double top, but they're making a lower high. They're lowering the offers. They want to push this down. So it could break and drop impulsively and go back up. I will be watching US 30. This is a security I trade religiously on a daily basis. I will be watching over the weekend after this daily candle closes in 7.5 hours. Will it close below here? Will I be making this green box red for the first time next week? Will we be retesting this? And are we selling next week? Those questions will be answered at the end of today's day. Now, do I have some points of interest on the daily? Yes. How can we not see this right there? Yellow line. Why? Because you got yesterday's body was bullish and bearish, and look at where it closed right there. Today, that's our opening price right there. And then we can figure out our high of the day is right there. I'll ask you guys, is it higher or lower than yesterday? It's easy. It's not a trick question. It's lower than yesterday. It's lower than July 7th. Okay, that was kind of pushing down. You see that the offers are coming down. We got a big bearish body. Now, let's follow the volume coming down today. We opened, we came, we made the high of the day, got rejected. We came back down to where we opened. Then sellers were in control. This was a bearish candle. Bearish, 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 bearish. Was there something that happened right here? This is a point of interest. A body closed and a body opened right here this week. Let's place another yellow line right there just for reference. When we got down there, what happened? Sellers continued pushing down, pushing down, pushing down, pushing down. We took out yesterday's low, okay? So that's a point of interest, yesterday's low. We have a low today that's formed, okay? I know it's a purple line right near a yellow line, but I can't help how the candles move. I'm not the market maker. I'm the market analyzer here. So it broke down, created a new lower low today from yesterday. However, we're still holding good volume from Wednesday. Midweek reversal was Wednesday that brought this move back up, but today they're bringing it back down. So we're still technically trading in this bigger green demand zone. We still have buyers there protecting. Look at where the purple line is, okay? Remember what I say, guys. The zone, this daily green zone was from the daily analysis. I had no idea where today's lowest point was to place, but now I do. I see it. Now grab your Fibonacci tool. I'll tell you, tape to tape and psychology. That zone, if you do your zone right there, look at where the purple low of the day is. Exactly 50% of this green box. I'm not making this shit up, guys. I've studied this shit for over 20 years. And I'm telling you, from the bottom of my heart, as truthful as I can, the markets are very psychological. I can get to the point where I don't even need to trade by looking at a candlestick, or I don't even need to look at a chart. I scalp the markets by just looking at numbers. If you tell me something is $100 and it was $200 and it's approaching $150, I'll buy it. I don't give a shit what the security is. I don't care what the time frame is. Just running off of psychology. That's how it can get to that point. I don't like to say that I trade like that because I don't want people to do that, but it's not being cocky or anything, but I'm just telling you guys that markets run on psychology. This is an online auction. Efficiency and transactions and discounts and premiums happen at 50%. A little bit above, a little bit below, that's your 618382. That's your Fibonacci ratio if you really want to get really technical with mathematics, okay? Sorry guys, I didn't want to spend too much time on this, but look at the size of the candle. It's very bearish, okay? Today's a heavy bearish day. So Wall Street could definitely come to the lowest point of the day and break, and we might revisit 44,233, the bottom of the green box. If it does break right there, you got a wick and a wick. You have to acknowledge these wicks. I don't care what color line you place here, but you got to acknowledge those because that's what's holding the entire Dow Jones up right there. If we lose this point, it's dropping. Where will it drop? There's a body, there's a body there, right? You can kind of, if you want, you can zone that entire block right there. You can make it into a block, whatever you want, whatever your heart desires. But look at this huge bullish candle. If you fail to realize 50% of that candle, I don't know what's going on, okay? That's me guessing where 50% is. I don't need to guess. Fibonacci, right there, open, close. See, Ron needs to smoke more weed. And then I'll get these accurate. Right there, I could draw another bullish zone on that. Remember, we're coming up from an uptrend. So all of these zones have pending buyers waiting. This one is the strongest one. This one is strong. This one is strong, but it gets stronger and stronger as you get deeper down into the depth of market, okay? So this could be like the first retest right here. It could bounce, and then it could come up here, and this is a red zone, and then they break this one down. Bigger buyers could be right there, because look at the big bullish candle. Still, we're going to do the fair value gap crash course later today. These are orders that are still pending in the market that never got filled. These are unfulfilled orders. They're buyers that want to get in, but they don't want to buy the all-time high. So these are not retail traders. These are institutions. These are hedge funds. These are big banks, okay? These are the guys that move the markets. They're not you and I. We're the retail traders. They consider us dumb money, right? Fuck them. We are the smart money. We know their games now. They are the dumb money. Don't tell them, but they gotta switch up their game because we're on to them. Retail traders are getting very, very, very smart lately, and we're uniting. That's what I like. I'm not in competition with other retail traders. I want to help us and we make money together. I don't give a shit how much money we take from the banks and the institutions. It's our time to eat. They've been eating for 100 years. Now it's our time to eat. On the hourly, do we see a channel? If you can't see this channel, I'm telling you guys, I don't encourage it, but go outside and smoke a joint. If you do not see this channel right now, I do not know what to tell you, okay? Look at this channel. Look how clean it looks, okay? It came up and it pushed right to that daily position, 50% right at that dotted line. The dotted line is the channel right there. And it continued to move back up. It got to the highest point of the day. There's the purple line, 8 p.m. Eastern, futures market, big drop. We saw that on NASDAQ. And then it retraced slowly back up, lower highs right there. If you want to have hourly lines, you're more than welcome. You should have a white line right there, 44,555. Holy shit, we're a couple minutes away from Wall Street. Okay, so continuing to push down. Now we're consolidating. Again, do I have another hourly point of interest, maybe going into Wall Street? I would go with this one right here. 44,442. So you can see it made a lower low to the lowest point of the day, came back up. At 7 a.m. we had a bullish candle that got right up to that hourly resistance, pushed down. We came back down at 8 a.m. You see, if I look at now this bullish candle right there on the hourly, can I figure out where 50% is of this candle? I know it's a lot, but right there, there's 50%, the white line. Okay, so now I know exactly where it's 50%. They did trade a little bit below it, but came back up. Now they're trading. This is going to close in 32 minutes, and it's going to represent Wall Street. So is Wall Street going to continue to come down in here, or are we going to start to maybe reverse our way back out? So on the 5 minutes, this is what we got going on. Okay, so Wall Street is going to open now in 2 more minutes. Let's add our daily bar indicator on the side here. Remember what happened? We opened, we made the high, came all the way down, and we're coming back up, but we still have this heavy bearish candle. But right there, white line, if we do come up there, that's hourly resistance. That's daily point of interest resistance. That's another hourly resistance. And then we come back to the opening price. However, if we keep coming down, we break the low of the day, we could drive down to the bottom of the green box, the daily point of interest right there, and continue to come down there. I could look at all the 5-minute candles. If we start breaking the purple line, right there, you see when they dropped it right there, that was July 9th. You know, I can start to mark up a couple red lines right there. If we do drop, maybe 44,281, maybe it breaks the low of the day, and we find some support and comes back up there, okay? Let's just add quick EMAs, 9 and 200, green and purple. Let's put these things side by side. Okay, we got US 30. You pick your poison. You pick what you trade. I'm going to try and keep this so we can see. You see, guys, when I do it like with 2 charts together, it's hard to see. But anyways, guys, we got 1 minute, less than 1 minute for Wall Street. Have rules when you're trading Wall Street. Either are you trading on impulse? Are you waiting for first 5-minute body to close? Maybe you wait the full 15 minutes till 9:45. Some of you guys are waiting till 10 a.m. Whatever it is. Are you using feeler trades to feel out the market, or are you going all in with your Lambo sizing? What are you guys doing? Make sure you have a plan. Make sure you're on the right security right now. Check your platform. Check your spreads. I'm checking right now. I got 1.2 spread on US 30. I got 0.8 on NASDAQ, depending what I'm trading. And remember, NASDAQ and US 30 are not the same index. They're completely different, okay? And NASDAQ is more heavily weighted with tech sector. US 30 is a whole basket case of a whole lot of shit, okay? So here we go. Here's the first initial 10 seconds of market open. Bullish, okay? Is it going to be bullish? Is it going to be a fake out? You see NASDAQ is hitting that 200 EMA, coming right back up. It's kind of building off of this double bottom right there. Kind of came down, back up, down. It was building, and now you're getting an impulse breakout for Wall Street. If you're in a buy, congratulations. That's not bad. Like if you're a scalper and you're scalping right out of Wall Street, that's a good candle. Like this candle already on US 30 is 90 pip candle. Congratulations, you're done for the day. You just hit your daily goal in 10 seconds. Have a great weekend, everyone. Sometimes that's all scalpers are looking for. But if you didn't take that trade, let's watch what happens. No weed for you, Sherry. No. Weed is not for everybody. That's good. I'm trying to cut back. I'm trying to cut back myself. I don't know if I can go cold turkey, but I'm cutting back. Okay, so what do we see so far? Okay, so US 30 had a really nice big bullish candle, that white line, hourly resistance, okay? So technically it broke out from that 5-minute candle at 750, created a new higher high, and then they're rejecting the move right back down. So that's why pip and dip. That's another thing, okay? If something goes up 100 pips and you don't do anything, unfortunately this shit can happen, okay? It's happened to me a million times. That's why I say pip and dip. You know, there's nothing wrong with taking some money. Look at that candle. It could flip bearish now. 100 pip candle gone in 1 minute. Like, that's how disgusting these markets can be. That was, sorry, a 82 pip candle. But now it's turned into a shooting star, okay? So you see the volatility of market open. And if you want to see exactly what that looked like, that's exactly what it looks like on the 1 minute. It just came right up bullish. Look at that hourly point of interest. They dropped it right back down. If you're marking 50% of those candles, you could definitely do that. There's like the resistance of all of those 1 minute candles going across. I could have a line right there, okay? So, wow, okay. Big sharp rejection. The buyers are slowly coming back in, but they have, again, the size of the wick. We talked about that, firecracker. So for the buyers, they got to fill that wick all the way back up there before they can create a new high. So yes, they could fill up there, but sellers could be right there absorbing them and pushing them right back down. So if you're not in a trade, let's wait this. We got 2 more minutes. I'm sure we're patient enough to wait 2 more minutes for the body to close. And then notice for stop losses, okay? If you do take a trade, that range of that candle, now the entire range, okay? Remember, from the lowest point to the highest point of Dow is 95 pips, okay? Almost a 100 pip range. So if you're looking to buy or sell and you're using like a 20, 30 pip stop loss, you have a high probability of technically getting stopped out. You might have the right direction, but you're not allowing it enough room to breathe. Okay, so even NASDAQ, it opened all the way up there, got just past that daily point of interest, and they rejected it back down. Okay, so big move up, big rejection back down. Where will the bar close? In 30 seconds. Here we go. And just pick your security that you guys are watching, please. If you're trading NASDAQ, if you're trading US 30, gold, also gold. Okay, so gold retraced all the way back down into that 1 minute box and pushing right back up. Okay, so here we go. Where will this body close? Will it close below this structure? Will it come back up? Okay, look at, okay, so it's a big shooting star candle coming down. Okay, where will it in fact close? Okay, so here's the close. Close. Remember, we're below the white line, so if it comes up to retest, the white line could be the resistance. I know we could miss out on a breaking candle dropping right now. Otherwise, you could be waiting for a possible retest like right around here for US 30. Maybe it doesn't come down right. You don't get that opportunity right now, but if you wait it out, maybe. There's the 9 EMA also in that red zone. So maybe you got to wait for it to come down maybe to this daily point of interest. It might come rotate back up. You might be able to sell that pullback if you're not in right now. This is kind of a continuation off of that big rejection. It opened and it's pushing down. But now we're at a daily point of interest and also the low of the day. So you got to watch, will it reverse back up now? Okay, so will it get a wick? And if you sold that candle, no, it's a not bad scalping candle. I'm talking about a scalp candle. That came down, again, at 30 pips. If you don't do anything, it could come back up. Scalping. I'm talking about lower time frames. Okay, so it came down exactly to the yellow line, daily point of interest where it held support right there. And look, it's flipped the candle back up, bullish pin bar now. So now we might get a possible retest of this hourly resistance. Okay, this could be a possible retest opportunity. Sometimes it will not come up in retest. It comes up right here and it goes back down. So you got to either ask yourself, do you want to trade that candle prior to it getting retested? That's an option. Otherwise, just continue to wait it out. See if we actually get a retest. I know it might be hard to see. I hope it's not hard to see for everybody, because we got two. Maybe next week what we'll do is we'll do single charts. We'll do gold as its single chart. We'll do NASDAQ as a single chart. We'll do US 30 as a single chart. And then we look at the bigger picture, okay? Unless you guys like this and it's okay for you guys, this split screen. Okay, so now we actually retested. Okay, get ready. Okay, I'm going to go into sell now. On US 30. Okay, it tapped that. Oh, sorry, I haven't even adjusted my stop loss. It tapped that white line and came back down. So I'm in a sell. Okay, so I'm entering on a retest. I'm gonna place my stop loss. Okay, I'm not going large sizing. I'm gonna give it some room to breathe. I want to give it above this kind of wick. You know, if the buyers come back up, what I was saying, this exhausted wick, maybe they get pushed down. But I see that there's a lot of wicks around this area right over here. Okay, so I kind of want to just keep my stop loss above there. I want to kind of trade back down to that yellow line, maybe break the low of the day and start to drop with this move. So I'm in a current sell on US 30, and NASDAQ is already pushing down. Like I said, US 30 could be a snail behind, but let's measure. Okay, so we know if it comes down to that yellow line, fills the wick, that's about 30 pips. But more so to the back to the low day could be about 50 pips down there. Okay, so I'm in a current sell, and this candle is going to close in 90 seconds. So hopefully we can get some closing bearish volume somewhere down here. It would be really nice if we can close relative to these bodies down here so that we can further push down. So I saw the retest right there. It came to that 90 EMA, that hourly white line. As it came right back down, that's when I sold. Okay. So I waited patiently for the retest. Sometimes you wait for a retest, you go in, sometimes you get punished. NASDAQ is really, really pushing down, okay? So holy shit, NASDAQ is really dumping down. Keep an eye on also NASDAQ. If it closes below, remember that box right there? It might close with the volume below. Look at, we already created a lower low. All we need is that volume close below and it could continue to drop down. Okay, and last 30 seconds, always pay attention. On all candles, last 30 seconds, who has the momentum going into the close? And where will it close? Okay, 10 seconds to go. Here's the close for both NASDAQ and US 30. Okay, we got a bearish ignited candle that just opened but flipped blue. Okay, so got a kind of a doji candle pushing down. Size of the wick is large to the downside, but this is Wall Street's volume. Okay, so it's not like this is Mickey Mouse volume. So it could definitely fill that wick and drop further. There it goes. Okay. Right down to that daily point of interest, a little further down, I'm talking about like 40 pips. I'm going to start reducing my stop loss in this trade. Okay, so it came down to about 30. What is that? 35 pips? Yeah, 35. So I'm looking to continue to break down, and then my stop loss is going to start to come down to reduce my risk in the trade, and I'm also going to scale out a little bit. There we go. Okay, so if we get that one continuation push. And then if you want to kind of hold the trades, you know, if we can close with bearish volume below this yellow line, we could make this daily yellow line into a resistance line and continue to break and cause a new low of the day. Okay, so remember, there's a shit ton of buyers down in here, okay, that want to buy this dip. But, you know, I'm currently selling where there's a lot of buyers. Okay, so they are there. They're buying it right back up. I didn't reduce my risk and I didn't take out any profit. It might come back and hurt me, but You know, you gotta kind of do something. I didn't do anything. I admit it. So now I might get another opportunity. Okay. But what I'm looking at is it did create a lower low. I got a lower high. So it could still, all I need is that volume to continue to trickle down. Like how NASDAQ came down, retested. Look at what it retested. The yellow line acting as resistance, came back down and created a new lower low. But if you want to stay with the trade, you got to get that volume to close below there, okay? It sucks because now the candle flipped as a pin bar, bullish. So it definitely could come back up and retest or make a lower high. But I'm still in the trade. I'm still sell side bias. We're still got volume below the 90 MA. We're below the hourly point of interest. We're just struggling to break this daily point of interest. It's not easy to break this. But when it does break, that's when a flood could happen to the downside. Okay, so now I'm getting another opportunity. It's coming down. There we go. This could be now got absorbed by more sellers, and this could be the push to the lowest point of the day, the purple line. But also 2 more minutes to go. If I get that volume continuing to close below this yellow line, could get a good move. Okay, so get ready because I'm going to start reducing my risk. Hopefully you are too. I'm going to break even now. Okay, so break even. Worst case scenario is I don't win, I don't lose, but I'm looking. I think I'm getting greedy. But worst case scenario is it's at a break even. Okay. Up 30 pips in profit with a break even. I really want to break that low of the day, and the market might come down and just punish me for this. But regardless, I have no capital at risk. I'm always good when I have no capital at risk. Okay, so I might get stopped out. I'll let you know when I get stopped out. My broker is just a little tad different than these trading view numbers here. So I'll let you verbally know when I get stopped out. But I'm at a break even. And we're closing in less than a minute. You guys don't know how technical it is. If we can close with bearish volume below that yellow line, same with NASDAQ. If it can close with volume below that previous low, it could definitely continue to push down. Okay, look at where the volume is fighting. Right at that yellow line. It's going to be very technical on the close. Come on, reward us for a Friday. Give us a good bearish close. Come on, sellers. Push, and close it below that yellow line. You don't know how technical that is if we can close below there. Wow, okay, good push. If we can close below the purple line, oh, that's even better, okay? Here's the close. So, oh, we did close technically below. We got an ignited bar that opened. Can we break that low? There, we break it. That's 50 pips. I'm securing 80% right there. I'm grabbing 80% out at 50 pips. I'm out. 80% out at 50 pips, and I got 20% runner. Perfect. Okay? We got runners running. I hope this dumps. You know, I don't care. But I secured 80% at the break of the purple line. Okay? So if it can continue to come down to that red line, that's about 80 pips. Now it's 20% running. God bless. I hope it runs all day, but I'm securing some money. That's a daily goal right there. Hit the likes on YouTube, guys. If you understood the assignment, if you subscribe to the channel, and so a big clue was that big rejection wick at the market open right there. They took out the liquidity above the hourly high. We're patiently, if you sold that wick, that's fantastic. But let me just walk you through. I waited for it to close. It was a bear shooting star. Remember, I waited for the retest. I waited for that bullish candle to open. Look at what it retested, the white line, the 90 MA. As it was coming down, that's where I took my sell. I placed my stop loss, I told you, above these wicks in case it was going to come back up. And then I held, it came, almost got me to break even when it was coming down, but closed below that yellow line. I can't tell you the significance of when it closed below there. Notice how it just flashed. I thought it opened ignited on my screen, but now they added the wick. But as it broke there, when it got to the purple line, the low of the day, 50 pips, I secured 80% and I got 20% running. Look at what it just tapped into, the red line down there. Okay, so that's 80 pips down there, 83. You know, you can secure a little bit or you can leave your runners, okay? God, I love Miss Jones. Oh, she's so beautiful, Miss Jones. Like, she wants to look good on a Friday. She's going out for the weekend, okay? She looks like, yeah, she's beautiful. Anyone that says anything about Miss Jones has to answer to me, okay? We love Miss Jones. She's beautiful and she just keeps giving. She keeps giving on a daily basis. But you got to treat her with respect. You got to treat her good. Dave doesn't like her. I know. Believe me, I have these conversations daily with Dave. No, my wife knows about Miss Jones. You know, she knows about Miss Jones. If my wife wants purses and she wants fancy shoes, she's got to let me have my time with Miss Jones. She's my mistress. But guys, this was fun. Today was actual good volume for a Friday. Started with gold. You know, there was no issues with gold. Look, good selling opportunity on gold. You know what I mean? Look, it came up, back down, support, double top, M pattern break. Wait 90 more seconds for that body to confirm closure below there. If it does, you flip that green zone red and you could be dropping further down to that daily point of interest, 3345. Look at what it's doing. It's created a double top. Like, you can kind of walk into trades, you know, if you're a scalper. Just got to let things build. You know, we weren't even looking at gold till Wall Street. Now I'm looking at it. Could be a possible sell situation, okay? And wow, holy shit, okay? Look at the rejection right there. Why did I place that red line right there? Look back, look back, look back. It was all because of this structure right over here. I told you guys, you know, if we break today's daily low, it could just come right down there because they want to protect it. And that's where it was protected in the past, right over here. And holy, NVIDIA reached all-time high, $166 a share on NVIDIA. Wow. Okay, guys. So unfortunately, I have 20% running. I didn't take out my normally what I do is I take out 10% down there. I didn't. So this could come back and just hit me break even. But thankfully, I grabbed 80% out. But see, guys, how technical trading can be. Look at NASDAQ. It came right down to our hourly white line. This is how you got to be very disciplined with your tape-to-tape trading, your tape-to-tape scalping. It came right down there, right to that white line and tapped, and look at it go back up. So this is where the market can turn bullish now, okay? We're not even at 10 a.m. Now we're coming right back up. If it closes back above here, it picked up, took out the lowest point of the day, took out the liquidity. You know, that was that sell we were in. Now it could come right back up and turn into a really bullish Friday. Like if it comes back up here at 10 a.m., closes here, retest this green, we could be driving like this on a Friday, okay? If the markets turn green, forget the bearish, we could start pulling back up on this big daily candle to a point where 50%, and then that's where the big sellers could be positioning themselves. But that's it. Like my trade right there, break even, the 20% is out. So that's why sometimes markets are fast. You got to do something. I know we try and hold trades for longer duration, but sometimes that's not always the best plan. You know, you gotta reward yourself along the way. You gotta take some money out always. Okay. Any questions about anything today, guys? No, all good, Shay? Yeah, so guys, if you're going to continue to trade the rest of the day, which some of you guys are, I would focus at 10 a.m. where candles close, right? Focus on your hourly candle because who knows? Maybe the market is going to continue to come back up bullish, okay? NASDAQ is already moving back up. Again, if it comes back down to retest, like this big 5-minute candle, I'm sure that you can find a point of control on that candle. Opening, closing price, where's 50% or just a little bit above, a little bit below? Right there. There's the big, like your big zone of that big body candle coming out of Wall Street. So any retracements, like if it comes back down into here, you could possibly look to buy above in here and take it back up. If it closes below here, it comes back down, bearish closes below there, you flip that big green zone red, and it could come in there. You could sell again that if it's red and then maybe come back down. But that could be support going forward right there. So, that's how I trade. I trade off of these blocks. I set alerts, okay? So I don't necessarily just sit and watch all day. What I do is, like right now, if I was trading NASDAQ, right in the middle of that big block, I would set an alert right there. Add an alert, create it. So I've got it created. If I'm here in my trade station area down here, for example, if I'm doing some other work, I'll get an alert. I could come back and revisit that and watch what happens. I get alerts through emails to my mobile phone. I can take my laptop upstairs and have my on the table, go eat breakfast. If I do get an alert, I can trade off of there. If I go on the go, if I'm doing something outside of the house, I'll get an alert on my mobile. I still have everything. I got TradingView downloaded on my phone. I got everything. My broker is right beside it. I can execute everything. So, but what it does is it teaches me to patiently wait for the volume to come to me, where I don't have to sit and force trades or watch all day, because that's the last thing we want to do as traders is spend 5 hours, 10 hours staring at charts all day. You're going to get sick and tired of this. You got to give yourself 2 hours trading and then walk away. Go do some hobbies. Go enjoy some stuff. Sometimes I go fishing and I have my phone with me. If I get an alert, I take a look at it, and it doesn't mean I have to trade it, but I'm watching. If there's a good setup, I'll take it. With proper risk management, that can teach you how to trade throughout different sessions throughout the day on a 24-hour cycle. I know it's not the best where you get an alert when you're sleeping. Like for me, London session, I'm sleeping and I get an alert. That doesn't mean I just jump out of the bed and just start trading. The alert was there. I wasn't available. There'll be another alert the next day when I wake up. Things like that, guys. But that's how you can do this, guys. That will teach you patience. A lot of traders say, Ron, how can I learn patience? Waiting for trades to come to you. Right there. That's how you can learn it. Discipline. Some traders say, Ron, how do I learn discipline? Discipline by allowing the trades to come to you, and then you look for confirmations. You look for high probable setups. You look for patterns that you can recognize. You look for clues like fake outs. You look for liquidity grabs. You look for where bodies of candles open and close. You look for bullish ignited signals and things like that, whether you're buying or selling. But trading, I know it's very, 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 very difficult for most people to do. It's one of the hardest things to do, right? But I also want to encourage traders to say that trading can also be easy. I know it sounds silly saying that, but some traders can hit daily goals consistently. Look at our SST Discord and our traders in the group. There's some traders that consistently are showing profits on a daily basis, right? And they've learned how to do this. It's not just myself and Dave. We've got traders who had difficulty trading, could never figure out trading, always struggled, and now they're mentors in our group. Like we look up to them and we follow their journey and how they did it. And there was a lot of struggles, but with struggles comes success. You got to go through struggle in life to appreciate the good things in life. Some of you guys have been struggling for 5 years. Some of you guys have been struggling for 10 years. Some of you guys have been struggling for longer than that, but eventually you got to decide. It's got to come down to patience, discipline, risk management, and not trade every single day. Like, don't make this an addiction. Don't make this a casino. When you hit your daily goals, have the discipline to get out of the markets and go do your thing. At the weekly goals, some of you can hit your weekly goal by Wednesday. And I tell you guys, you know how lucky you guys are to hit your weekly goal by Wednesday? That gives you all day Thursday to relax, Friday to relax, an entire weekend to relax. That's the beauty of trading. That's why most traders want to learn how to trade, is to have the time. You can't buy time in life. As I get older, I look back and say, man, I wish I had more time to do this stuff with my kids. I wish I had this much more time to travel. I wish I had this much more time to spend with my parents. Trading allows that if you know what you're doing. You can literally, like I said, that 1 minute candle that opened at Wall Street, that was an 80 pip candle in 1 minute. When I showed you on the 1 minutes, it was a double bottom. Over here, like kind of right here, this structure on the 1 minutes, it came down, found support, came back up. The second, look, it came back down right there. The second bottom, 930, ignited, open. Like for some traders that are reading the 1 minute candles, that's a double bottom entry. Ignited bottom. Like if you bought that, you just place your stop loss below that wick. You got filled and you got that. That could be your daily goal. That's it. 1 minute. I know it sounds crazy. But to say, yeah, you could hit a daily goal in a minute, and when I have that conversation with other people, they're like, Ron, what the hell are you talking about? I'm like, maybe they don't understand to trade 1 minute candles, but sometimes you can hit your daily goal in Wall Street in 30 minutes. If your daily goal is not 1,000 pips, if it's 50, if it's maybe 100, you can maybe hit the daily goal. Okay, guys, but that's it for me. It's 10 a.m. Eastern. I'm not sure why the camera zoomed in like that. It's one of these AI cameras, but I gotta kind of I can give it hand signals, and then it kind of focuses and things like that. But I don't know why it came in so close like that and zoomed in on me. But guys, have a good weekend, okay? Have a blessed weekend. We'll get started again Monday morning early. We'll analyze everything that happened over the weekend. There's probably going to be a lot of news over the weekend. We'll dissect all of that, and we'll get started 7 a.m. same time. We'll run through COMEX, Wall Street, everything together, guys. Have a good weekend from myself and from Dave and everyone at SST. Thank you, everyone on Zoom. Have a great, fantastic weekend with your family and friends. And everyone on YouTube, we appreciate you guys as well. If you can kindly leave us a like, subscribe to the channel, hit the notifications, and we're going to get more into education. Guys, don't forget later on, 1 p.m. Eastern, if you guys want to join, we're going to do a 1-hour crash course on fair value gaps. We talked a lot about them today. We'll do a 60-minute crash course, fair value gaps, and also what are gap up and gap down candles. We'll talk about that briefly. It will be recorded. If you miss it, I understand, no issues. It will be recorded and will be uploaded to the website, okay? So that will be later, 1 p.m. Eastern, or just after. I'll notify you guys in the Discord, okay? Have a great day, everyone. Enjoy your Friday, Jummah Mubarak, and also a great weekend. We'll see you guys. Thank you guys so much, and enjoy your day today. Have a great day, everyone. Thank you. I gotta fix this camera. This is tripping me out. Have a good day, everyone. Thank you, guys. Karen, have a good weekend. Dale, Rob, thank you, brother. Thank you for everything you're doing in the Forex. Guys, shout outs to Rob Mack for sharing all his charts, his insights, his knowledge in the Forex Discord channel. The man's a legend in Forex. If you guys are looking to trade currency, learn from Mr. Rob Mack. The guy's a legend. Also, shout outs to Forex on coming back from the successful surgery. Bernard, everybody else out there in Discord has been fantastic. Guys, get more active in the Discord. I'll show you charts in there. Get feedback from all of us at SST, including the members. It will help you guys out. Just stop being being so shy, and just get out there.
Hey
It
guys,
doesn't
good
matter
morning,
what your
good
charts
morning.
look like.
Welcome,
We all started
welcome to
somewhere,
the live session of Stocks Market
but we
Trading.
can all
My name
learn
is Dave,
from
guys.
you.
My partner is
Okay,
Ronny.
I can learn
Let's
from
get
you
down to
guys,
business here, guys.
so we can all
In
learn
on
from
US
each other.
sell. Okay?
Take advantage of
Jumping
that.
in.
Share your
Guys, that's a
insights.
100 pip
and,
drop.
it
Yes,
makes the
we caught it.
community that much
Guys,
more
200
stronger.
pips, please. Secure.
Have a good weekend, everyone, and we'll see you guys. Thank you guys so much. Sherry, have a great weekend. Samuel, take care, brother. Captain Boom, congratulations on all your success, brother. You're a shining man, and it's well deserved. Eddie, thank you for joining, bro. Gwendolyn, have a nice day today. We'll see you guys. Have a nice weekend, everyone. See you guys. I'll see you guys at 1 p.m. if I don't see you, but 1 p.m. But for those that can't make it,